Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Here we are, January 27th, the day before the Fed meeting, the day before a bunch of earnings. We've got Microsoft, Meta, Tesla, all coming up tomorrow. Overnight markets somewhat quiet, higher again, S&P nearing that 7,000 number. Not much going on in energies. Dollar continues to get smacked, but yet the bond market stays relatively bid. I don't know. We'll talk more about that with Craig and try to figure out what the hell is going on there because I don't know. I don't get it. But joining me in studio to discuss all of this today, Senior Economist Tracy Shuchart. Good morning, Shai.
Good morning, all.
Senior Macro Strategist Craig Shapiro.
Good morning.
And the man in the middle. Remember they used to say that for the Chicago Bulls? Does anybody remember this? No. The man in the middle. That was Bill Cartwright. But the man in the middle of the screen. Going back to my days watching Michael Jordan every day. On the big screen, senior market strategist Jimmy Cagnina. Good morning, Jimmy.
Good morning, Naples, and what a great day to trade futures today. Let's do this.
I cannot believe that you guys don't remember. And the man
in the middle. Bill Cartwright. Yeah. It was great.
Here we go.
Yeah.
All right. Well, seeing how Chicago you guys really are. Come on, man. Somebody in chat for sure.
I'm Italian, Anthony. I'm not that tall.
Well, it's in this group. Yeah, I mean, it's so funny with when we meet all the traders. It's funny how tall so many of them are, right? So many of the streamers that we have on here. Yeah, Kane. Well, all of them.
All of them, really.
Stowe. Nick was pretty tall. XY is not. He's not very tall. Sorry, XY. He's not up anyway. I could talk crap about him. Again, market's not doing a ton tonight, overnight. Everyone's talking about whether or not metals have topped or not. I don't think so on my charts. And if they have, fine, they have. I doubt it. But, look at, if they're going to go down, there's going to be a lot of more volatility and a lot of trades, so don't worry about trying to catch the top. But we'll discuss all of that and more. Shai, the news.
So this morning in tech, we have NVIDIA invest $2 billion more in CoreWeave, and they're going to offer a new chip as part of the collaboration. CoreWeave will be among the first to deploy the forthcoming NVIDIA products, including storage system and a new central processing unit called Vera. The investment has sparked concerns about the circular financing deals that have lifted valuations of AI companies and fueled concerns about a bubble. So we have that going on. Again, we've talked about that circular nature a lot on here. We have Micron, MU, is building a 24 billion chip plant in Singapore as it races to boost output among an acute global memory shortage. Wafer production begins in the second half of 2028. We do also have Intel and AMD are considering 15% server CPU price hikes as demand surges. Lead times have stretched from the typical 8 to 10 weeks to over 24 weeks, according to industry sources. So tech chips getting much more expensive. That's going to affect data centers as well. And all of the debt involved in that.
They keep spending a lot of money. I'd like to see the results soon.
Exactly. Moving on to markets, Goldman says the market is the most risk on since 2021. So investor appetite for risk is the highest in 5 years. His optimism about the economy encounters geopolitical uncertainty. The bank's risk appetite indicator hit 1.09 last week, the highest since 2021. It's in the 98th percentile of readings for the gauge, dating back to 1991. The Goldman team said such elevated levels of risk are rare, but this is not necessarily a bearish signal. Equities can be sustained by a supportive macro backdrop. So they're out there saying markets are frothy, so we'll see. Again, you mentioned the dollar sell-off this morning. We have dollar traders are paying the most on record to bet on a deeper sell-off of the greenback due to a volatility in the U.S. political landscape, the premium for short-dated options that profit from a weaker U.S. currency has widened to the highest level since Bloomberg began compiling the data in 2011. Obviously, we've talked about the dollar and the pressure and the concern about U.S. rising deficits, trade frictions, as well as we've seen an acceleration into diversification assets like gold. Next, moving on, we have silver's rally fueled by China buying and tightness. So we're still seeing prices in the largest economy in China, largest Asian economy, China, are trading at a premium to comparable rates in London, where the global prices are set. So we are seeing a lot of demand for the physical coming out of China on the retail side. So very interesting. And I guess as long as premium remains elevated, traders and investors elsewhere are likely to feel emboldened in their belief that London and New York prices still remain too low. Interesting. We had overnight, we talk about the yen a lot. We had that rapid drop on Monday, kind of started paring back some of those losses. And then all of a sudden we had a 150 pip drop towards 153 in a matter of seconds. That is a move similar to the one we saw last Friday when they had a rate check. So a lot of kind of chatter about that, whether we saw another rate check or not today. I was up. I saw that move. It was crazy.
Of course you were.
And then we had Donald Trump threaten to hike tariffs on Korean goods to 25%. That escalation didn't last very long because South Korea came back and said they reassured the U.S. that their U.S. investment pledges will be on par with what they said that they would do, because they were not moving quickly enough, I guess, for the administration. You mentioned we have tomorrow we have Meta, Microsoft, and Tesla after the bell. On Thursday, we have Apple after the bell. As far as data is concerned, today at 8:15, we have the ADP weekly employment change. It's just the weekly number, so it's usually late and nobody's really looking at it as much anymore because we have NFP is back back alive. At 9 a.m. we have HFA housing price index, S&P Coality, which is also another housing index, not really market moving. 10 a.m. Richmond Fed manufacturing and Richmond Fed business conditions, along with Conference Board consumer confidence. Consumer confidence will be interesting. Richmond Fed likely won't move the markets at all, but consumer confidence potentially could, depending on if we see a big change in that. And then 10:30, we have Dallas Fed services activity, also not really a market mover.
Okay. I go back to the dollar with you, Craig, because I look at this market. This is a head scratcher to me. Again, you got yen get bid up overnight, dollar weakness, bond market doesn't move. Equity's totally putting it off now. Is everyone just waiting for the Fed tomorrow? Why is the bond market not acknowledging this weakness of the dollar?
No, I think that's part of it. I mean, we talked about what the president's been doing, and the message out of Davos, and maybe it was a sell dollars kind of mentality. People may be fed up with his antics and his whatever he's got going on. But to see the dollar weakness without bond market weakness, I think is bizarre, right? If folks are in a sell dollar construct and they're going to start reducing their weights towards dollar assets, well, treasuries are the biggest overseas asset that is owned by foreigners. So we're not seeing that there. So there's a little bit of a divergence in the narrative. I'm not exactly, sure, but maybe there's just some cross currents going on. Maybe you are seeing some of the repatriation of flows out of the U.S. back into Japan or to Europe, but you're also seeing some concerns about maybe the pace of the economy or just some broader risk off things given the inflation or given the commodity moves. So I think it's a little bit of both. But in order to really see a sell U.S. assets construct narrative develop, you need to see the bond market move. Maybe it is waiting for tomorrow with the Fed, although the Fed is kind of really not going to give you much. It's not going to cut rates, and Powell's probably on the margin going to be a little bit more hawkish than not, probably given all the back and forth with the president and the uncertainty about his position. So, but we'll see, right? I mean, I think we need to see some more data next week. We get, reintroduced. Hopefully, if the government stays open, we'll get payroll data next week. We'll get the ISM data next week. And so I think investors are looking to see, was the pace of strength in the economy through the end of the year, propelled and continued into January. So, but a lot of cross currents, a little bit of uncertainty there, why the bond market isn't necessarily reacting so violently to how poor the dollar has been trading.
Yeah, and Shai, where'd you say the dollar index is this morning now?
So dollar index is at 96.62.
And where is that? I don't follow dollar index too closely. Where is that relative to what it's been in terms of weakness? Is this the weakest it's been in how long?
Almost 4 years.
4 years.
Yeah.
So.
Well, we saw the dollar index trend, I think, September.
Yeah, we had on 9/12 we had a print slightly lower at 96.21.
So we're at the two lowest points within the last 4 years. I mean, again, nonetheless, it's on a relative basis. If you look at it, again, I'm not following super closely what the dollar is doing. I mean, I have a general idea of if it's up or down because we want to see what's happening in markets. But I didn't know it was that weak. And again, you're not seeing a lot there, and so I kind of wonder what eventually comes of that, if anything. I mean, sometimes things just end up happening, and maybe the yen, stays bid and nothing happens. I doubt it.
Yeah.
But we'll see. Jimmy, let's go to you and let's take a look inside the tape a little bit more. S&P up 17 this morning, just below 7,000 at 69.98. You've got the NASDAQ at 26,013, up 163 points again. NASDAQ and S&P, what I find interesting about both of them is that we're back up near the top of what their ranges have been. And we'll see if the bulls actually are made of anything up here. Do they really want to take this higher today into tomorrow? Who knows? I mean, we've been a mean reversion market all year long. I continue to look at the charts and go, every time we get up here, there's just no business. And we'll see what happens today. Russell's up $2 to 26.72. And the Dow was down 250 this morning to 49,315. Is there something you want to say about that, Shai?
Yeah, I think a lot of that has to do
Healthcare?
with healthcare, UNC, and Boeing.
Yeah, because of more earnings. That's what I figured. Again, the divergence up near the highs or divergence near the lows. This is what we keep seeing. It's why the market has no legs higher and no legs lower. Mean reversion tape. Really good for short-term traders, by the way. Your short-term strategies, to me, are more relevant than the longer-term, bigger picture stuff, which a lot of times that's not the case, right? A lot of times we're in an upward trend. You'd rather be more long than short because we're trending higher, or vice versa, we're trending lower. Right now in equities, you could trade both sides, I think, all day long. You're going to get opportunities on both. So don't have FOMOs. What is Pax calling it out? JOMO? It's not a trend that's going to stick. No one's going to be saying JOMO. I mean, this might be the last time I ever say it. But crude oil's up 19 cents this morning. Again, everyone keeps telling me it's the cheapest asset out there, but it trades like complete crap. It doesn't do anything.
Well, and surprisingly, U.S. because of the weather, U.S. production is down about 1 million barrels per day over this weather.
Yeah, I mean, I want to buy crude. I mean,
we're gonna talk.
I want to get long, but every time I get long, I make a. We'll talk to Arjun. Maybe he'll help me find a price. Natural gas this morning down 4% to $3.73. Gold is up $3.50. Everyone thought gold was probably going to be down big today. It's back up again. Opened up on the overnight session and went straight up. So we had that gap down and then rallied again. Silver, almost 113. I thought it topped. I thought I saw that on X. Might have been a misprint. 112.76. Why be in a hurry to catch a top in silver? I mean, we all know the reality is because you didn't catch the rally, which I didn't catch it. I mean, I caught it earlier. I mean, that's 50 handles ago. But so what? Yes. If it's going to go down, we'll be ready.
I mean, it rallied $10 off the low.
Yeah.
Yes. So. Yesterday, SLV, the silver ETF, traded more options than QQQ. 6.8 million options total yesterday versus 4.9 million for QQQ. So retail trade. I mean, SLV trading is retail trading, right? That's retail investors trading silver through ETFs in options. Big zero data expiry action yesterday. Friday expiry, Wednesday expiry for the SLV print. So. That's concerning, right? If you're, maybe not. I don't know. It's showing a lot. There's a lot of interest. Volatility is through the roof. Bid-ask spreads are out of control. It's very difficult to trade. The silver market and the silver options market really is kind of broken.
mean, I like taking risk.
Yeah.
Okay, let's be honest. That's why I'm in this business. I like to speculate. I could take a decent amount of risk. I look at silver and go like, well, what am I going to do here? I mean, where I'm wrong or right, it's like, the risk reward is so skewed. It's like I have to take a decent amount of risk to make a decent amount of reward. There's so many other better places for me to trade right now. I mean, even if it's a micro, it's like, why do I want to put a wide stop where you could park a Mack truck between the bid and offer? I don't love it.
What's going to be interesting is the new contract on February 9th, the 10-ounce contract.
Yeah.
Oh, yeah.
I'd be interested to see how much traction that gains, how quickly, because generally
it will.
when you get a new contract, it does take time for
We got
it to
CME
get
coming
to
on
the
to talk
volume.
about that too.
But
Yeah.
but I think that's gonna gain a lot of traction right out the door.
I think for short-term day traders, I mean, if you want to come in and scalp it a little bit in the micros or those smaller contracts all day long, I don't scalp anymore. So if I'm going to put a position, I don't want to be getting tagged out of it for 50 G's in like 2 minutes. It's not fun. I mean, we've got platinum at 26.86, down 191. They have come off quite a bit, so down 6.5%. So you're seeing some divergences also in the metals. Bond market down a little bit today. We've talked about that. Is it finally going to start taking note of what the dollar is doing? 115.16 down 11 ticks in the bond market this morning. 10-year yield this morning comes in at 4.233. Really, you've done nothing in the 10 years just sitting here. Again, maybe tomorrow things change. We'll see what Powell says. And again, this is where I go to you, Jimmy, this morning. Last but not least, we talk about everything against the dollar. You got the pound up 0.5% to 137.38. Euro's at 119.56, up 50 cents, another 0.5%. Yen is up 0.5%. At 65.49 in the 6J. And the Swissy's up nearly 1% to 130.43. And so there you have it. You've got the dollar weak against all of that stuff. Bond market barely doing anything. What's catching your eye, Jimmy?
Well, a couple of things. I mean, all the stuff you guys are talking about with the dollar, with bond prices, with currency pairs, the equity markets don't seem to care. They're kind of shrugging all this stuff off for whatever reason you want. But, even the S&P right now is really, there's a really nice kind of high volume node right where we're at, December highs, 69.90-ish. And there's a lot of volume there for the month of January. It's kind of priced right now until something changes. Will earnings be enough to move it? Maybe. The NASI is weaker. The NASI's got its volume profile is a little bit further south than the E-mini S&P. So when I compare the two, the winner of the race so far is going to be the S&P right now. So can we make new highs? I don't know. We'll find out. But another green candle today. When you look at the recent price action, well above that VWAP as well. And moving averages are all just kind of arcing up, crossing over each other. So it's looking pretty positive just from a technical point of view. The equities that I'm looking at, the Dow might have a little bit of a harder time today with earnings that has already come out. You can kind of see that in an intraday chart. But equities, I don't know. I'm not ready to rule them out yet. We'll see what happens here. Russell is still up a little bit as well. And then all this talk, Deli, about silver being at a top. Ready to sell off. Here's a 2-day peak of that intraday silver. The interesting thing about it is today and yesterday, we're both trading within the value area, right? We haven't really deviated much. Yeah, we had a little bit of a lift up here. And then we kind of sold off a little bit below. But most of the action has been right smack dab in the middle, around $110. This is not showing me weakness right now. I'm not ready to say, I'm getting short silver. And the same pattern shows for gold. I'll show that in the Edge report. It's pretty much the same. So we're kind of sticky right now. Previous sessions highs, this is going to be a really important level in silver for me. I know it's pretty far away. It's $117, but the way this thing has been trading, I'm not ready to throw the towel in just yet.
That's nothing for silver right now, $4. Again, I look at a very simple way of trading. When we're going up and we're above a short-term moving average and the mouth of the Bollinger Band is open, I'm not really fading it. It's like when it happens and it turns, how many times I think so many people in their lives, they have not seen markets that have like turned, and then when they turn, the bigger move comes later. Everyone tries to catch the turn, and that's where you get the small piece of it. The big piece you capture is after it's turned. not being the first one in. And psychologically, everyone wants to be the first one in because they feel like they want to catch the perfect price. I don't care about catching perfect prices. I just don't want to get ticked out, along the way, and eventually I catch one, and then fine, I make it back if I'm lucky. Everything I've been getting killed on. If you haven't been long it, it's over. I don't know what to tell you. I mean, move on. Find something else to short. I mean, you want to keep trying to short metals. Best of luck to you. I mean, again, I go back to it. It's too difficult to manage risk. You could be wrong 5-10 times in a row, and maybe you catch one winner, and guarantee you won't hold it all the way through.
100%.
Yeah. I want to go back to you, Craig, and talk about where we are, negative gamma, positive gamma. Where are we with the indexes? I see the divergence. We've got, divergence again from earnings. Dow is down. Is that going to impact the S&P? Are we back to positive gamma on S&P?
Well, I spoke about this in the afternoon session when I came on for a couple minutes yesterday afternoon, just talking about the divergences under the hood. I mean, so you're seeing this pickup in volatility across FX and across metals, but you're not seeing it necessarily yet in the S&P or the NASDAQ, but you are seeing it under the hood. Yesterday was the second day in a row where we saw a decent unwind. The Russell starting to underperform the NASDAQ. Most short index down 3.5% yesterday. Some of the crappier stocks starting to lag, which I think makes sense, right? As volatility starts to come back into cross asset, and we're seeing some deleveraging, those positions that are a little bit more suspect, some of those short squeeze positions are starting to fade out. Now those have been the leaders to start the year, right? The Russell's been leading. Some of the garbage stocks, some of the most short baskets have really been leading to start the year. But the last 2 days of trading, we've seen a shift back into quality. Apple had a big day yesterday. Microsoft, big day yesterday. Even Oracle, which I wouldn't consider quality, but had been on the other side of the short squeeze. So you're seeing kind of flows back into that. And then again, this morning, Russell underperforming again. So I think we're starting to see some of that dynamic in play where under the hood, there's a character shift potentially going on. Tomorrow's a big day, obviously, with the Fed and the earnings after the close. But I am, for those who have been looking for that buy the dip moment in Russell, I mean, potentially you're getting it, but I'm starting to see some of concerning factors here with the most short names and some of the highly leveraged names. Really, yes, it was a really bad day for a bunch of those names. We'll see how they trade today.
Are we back to positive gamma on S&P?
In S&P, yeah, we're, modestly positive. Above 6950, yeah, we're back into positive gamma. But as if and when we did start to move lower, we would move back into negative gamma, reasonably quickly again. So, the flows there from gamma are positive, but tomorrow is such an important day between macro and micro, and rest of the week, end of January trading, big expiry on Friday, just again the weekly expiries, and now we have the Monday, Wednesday, Friday expiry for the Mag 7 names. Right, today I think tomorrow's the first day. We get Apple and the Mag 7 names. You can trade Wednesday options. You can trade Monday options. That's going to be a new dynamic in play that we have to monitor there too. So, a lot of flow stuff going on, but it's but from the flows perspective, we're back in a little bit of a neutral, positive gamma position right now.
I mean, there's going to be options 24/7, Saturday trading. I mean, every day expiry. I mean, what more do you need? Event contracts at night,
Prediction markets all day.
It's just it is what it is. It's pretty. It's just where it's going, man. I mean, it's fine, but people are gonna have to learn to really control themselves, which we know most people can't really. And one of the things in there was laughing. I want to go back to you, Shai, a little bit. It's funny. I don't remember who put it in there. He goes, "Cash is trash."
Cash is trash.
It made me laugh. I mean, what really is going? Well, from your perspective, Shai, I want really what you think about this, because it is such a unique thing to see where you have the dollar getting weak and you have the yen getting strong, like we've talked about. I mean, the Swissies catching a bit again. That's always like
safe haven. Yeah.
What's going on here?
So I think obviously what didn't help was when Trump said he wanted to take over Greenland and threatened tariffs on Europe. Again, that's really when we saw kind of the dollar back off. So I think it's a little bit of fears on, what is the U.S. going to do? What's the geopolitical situation look like? They're a little bit uneasy. We just had Trump increasing tariffs, or saying he wanted to increase tariffs on South Korea to 25% just yesterday. And so I think people are just a little bit uneasy, but I don't think it's obviously not a mass exodus out of U.S. assets. Again, we talked about that. We would be seeing a bigger move in the Treasury market. We would be seeing bigger moves in the equity markets, but we're just not seeing that. And so I think it's just a little bit of and I hate calling it the dollar debasement trade, but I think that is a little bit part of it, and a little bit of just sketchiness around the U.S. dollar, and with all of these threats sort of being thrown around, you maybe go into a little more stable currency like the euro, and not that European Union is doing
I was going to say that's
better,
funny to me, actually.
but that's where they're going to. Well, it's the next largest reserve currency, so natural they go there, and obviously the Swissy is a safe haven currency as well, and so I think that's more of that again. And I agree with Craig. Until we really see a move in the bond market, then I don't think this is, necessarily as scary as you think, even though we have been seeing some of the emerging markets outperform.
Yeah. All right, panel, we got to end it there. Thank you guys so much. It's about the time, everybody, for this morning's Edge Report. Take it away, Jimmy.
All right, let's start with the E-mini S&P. I just wanted to show that daily chart and look at where all the volume's been accumulating so far in January. And we have the bottom of the value area at 69.33-ish, top of the value area approximately 70.12. High volume node, we just broke through it for the second day in a row, 69.88. We're tracking almost 7,000 right now, above the December highs. So this is kind of skewed to the north. This is kind of a bullish layout in my mind right now. Intraday, interestingly enough, we have a capital P-shaped volume distribution here, almost textbook. We're right trading at that point of control right now at 97-ish. That session VWAP, we've tested it twice in the last hour really, and it's held. And it's held right at the London initial balance low. So that's another key level for me. Now, 0 DTE call resistance here is also kind of important. We're trading just south of that right now. We're kind of in the middle of that London IB. It's 7,000. But up above, look at these targets up above. We got a blind spot 2 at 17. We got JAX 3 at 20. We got R1 at 22. And we got JAX 1 up here at 70.25. So there's a lot of targets on the upside. Downside, there's a lot of empty space here until you get down to really that JAX 4 level, and then that Globex closed yesterday. So that's around 76. And then even lower than that, you've got that high vol level all the way down at 69.50. So there's a lot of room, empty space on the downside, a lot of targets on the upside for the E-mini S&P. We'll see how earnings and other stuff drive this thing going into, remember, it's an FOMC, so my expectations are somewhat muted. Let's shoot over to gold really quickly here. We're in February still. Your platform might have tried to roll you over to the next month up, but don't take the bait. Just kind of backtrack here in February. Nice kind of systematic rally here. Look at this, almost equal and opposite candle, almost an identical candle. But when you go intraday, I think this is where you could really get a good view of what's going on right now with gold. And I'm going to just show you 2 days back to back, Monday and today so far. I know it's early so far today. This is a 30-minute candle, but I'm just going to show you the top of the value area yesterday. We didn't quite get there yet today. That's right at JAX 1 at that 5,100 level. The bottom of the value area, well, it's kind of aligns with today's bottom of the value area. Not quite. It's a little bit skewed, a little bit higher today. But again, I'm looking at what happened yesterday versus today. 50.57 is where we're at right now. But look at those points of control. 50.98, 89, and then 50.82. So I don't see a big, the top is in here, and this is almost an identical look as silver that we just saw a minute ago. From a target point of view, we have JAX 1 sitting up there at 5,100, right? We haven't quite reached it yet. Now look how tight the London IB is, pretty tight. And then that point of control is right at the top of that London initial balance at 50.83. moving averages, that 9 EMA is going sideways right along R1. So there's a lot of area of interest right here, right around that point of control for gold. Seems like price happiness for now. On the upside, though, above and beyond that, taking out yesterday's highs, I think is going to be a big deal. If we do, that's 51.07. And then there's some targets. We got the blind spot 3 up here at 53.6, right next to R2. So there's 2 areas of interest there. And then Jack's 3 and 1 day max from MenthorQ at 5,200, give or take a couple ticks. So there's some targets way up high. Down below, we do have that VWAP that's kind of defining the bottom. Look at this. It was a really nice VWAP. We kind of tested it once here around 6:30 to 7, and that failed. We're trying to test it again right now. We'll see if it holds or not. It's right, just north of the bottom of the value area. Jack's 2, 50-50 on the downside, pivots, and then Jack's 4. Really where the rubber meets the road way down here, if we get a breakout to the downside, is that 5,000 level for gold. That's at that 0 DTE call resistance and the major call resistance level as well. Previous sessions lows, then it could be bombs away, so be careful. But right now, it's looking pretty good, and it's looking like we have a lot of price happiness right around that point of control at 50.82. We'll see how we do when the bell rings today. That is this morning's Edge Report. Back to you, Deli and Shai.
Thank you, Jimmy. All right, Shai, preview of our guest.
We have Arjun Murti. He's spent over 30 years on Wall Street as a sell-side equity research analyst at Goldman. He is a buy-side investor, advisor, and board member covering the global energy sector. I've had a chance to talk to him many times, and so looking forward to talking to him about what's going on in the energy sector.
Yeah, I'm looking forward to speaking with Arjun. And also today, remember everybody, we've got a stacked lineup for you. Following Arjun, we have Tape Talk with TTrades going over the CME segment. Then we've got Trade the Open, Black Boxes with Merritt Black and Christian Trading Boxes, Midday Markets, Jack of all trades, and Nick for a tick. And then Trade the Close with Leo, Joey, and Selma. All right, let's bring in Arjun. Arjun, good morning.
Good morning. Great to see you both. Thanks for having me.
Great to have you here. Now, I know we're going to talk energy, but I want to talk about the dollar because I think it feeds into energy, especially since we're seeing the dollar continue to get weak and crude oil just continues not to get any love. You would think, again, in this environment, every macro person that really comes on this show talks about how crude oil is the cheapest, one of the cheapest spots in the market, but yet it doesn't trade like it. And then you have a scenario where the dollar keeps getting weaker and it's still not catching a bid. What are your thoughts on that?
I appreciated some of your prior segments about trying to perfectly, time bottoms, and it's always tricky. I think on the one hand, I agree that crude oil is very inexpensive. On the other hand, supply and demand are going to dominate for any of these things. So as long as we're in a market of, I view it as modest oversupply, not the oil glut some talk about, we still have a little bit of excess to work through. I think, though, when we inflect, and maybe that's second half of this year, it's always difficult to get the timing. Demand is very good. OPEC's basically out of spare capacity. And some of the non-OPEC growth for the last few years, I think, starts leveling off. There's significant upside to crude oil over time. I think it's trying to time it is what's tricky here.
Yeah, no doubt. That's what we're all about, right? We're trying to be in the timing business. Early is
wrong,
I'm not.
Late. And so I don't mean to interrupt you, but so our job at Veriden is we try and give advice to companies about what they should be doing over the long term. We describe this as the bottoming phase. And so I think for any corporate viewers that may be out there, this is the time to be thinking about risk. That's not trading advice. You guys are experts at that. I'd say from a longer term corporate and investment standpoint, it's about as interesting a time as I've seen for crude oil in my 30-year careers because people are so bearish.
Yeah, I think we love to have that perspective because it helps us as traders time things better, right? Because if we know that something like that is what I would consider in play right now from a much bigger macro perspective, time perspective, then short-term day traders, we're going to look for that opportunity when it shows up on the charts because that's the only way we can manage risk. So, of course, we're going to lean more technical than macro because, again, that's how we build our strategies. So talk to us about why. I want to talk a little bit more about why the crude oil trade isn't working and maybe what it represents for the larger economy. Because I go back to last year, Shai and I talked about this a lot. The market it's the best market of all time, right? Well, you can't argue that because the markets are still back up to all-time highs. But yet you have crude oil not able to perform. At least in the past, when I've seen markets that are booming, crude oil becomes more in demand. Now, what's the dynamic there is it showing any signs that maybe we're not as strong of an economy as we think? Or is that not? It's just a different story.
I think we've been in probably a 7-year period now where global GDP growth has generally been sub 3%. So not recessionary, but certainly not the BRICS China boom period of over 4% global GDP we had in the 2000s and early 2010s. But it's actually even been a little bit worse than the 1990s. And so I think on the one hand, we see the prospects for a virtuous cycle, whether it's the AI and power trade, whether it's geopolitical competition, that desire to reshore. I think Tracy had a great note coming out of the Venezuela incursion. And those types of themes and energy access now coming to broader parts of the world, I see the prospects for better global GDP growth and with it, global oil demand growth. But in the very short term, we've had that combination of whether it's Guyana, Canada, Brazil, some of that increase in production, as well as OPEC2 very quickly choosing to unwind some amount of cuts. And I think that's all been an overhang on crude oil. But for those that have been especially bearish on crude oil demand, saying we're at peak demand and all these kind of talks, we've never believed in that. And I think that peak demand argument is really getting pushed to the wayside. And we're seeing overall demand doing a little bit better than was feared, but it's not been strong enough to get you to kind of the booming crude market that you've been talking about in some of these other metals and other areas.
And then I want to talk about, move over to just nat gas really quickly. It seems to be, last year and this year, the consensus trade that everybody's bullish nat gas. And the equities have done well, but, prices have, aside from this winter storm spike, prices really haven't gone anywhere. Do you expect prices to move higher and remain higher, or we just produce so much that it's price is not going to really matter as much as that the companies do?
Well, I will again caution your viewers that I am someone who takes kind of the longer term view, given all these board and advisory roles I have now to corporations. And in that sense, I think the long term view is that demand growth is going to be great for natural gas, whether it is for power generation, whether it's for LNG exports. But in order for demand to be great, price has to be competitive. You couple that with the fact that I think there's plentiful natural gas supply. So this short-term trade can certainly last if this combination of weather and some of the production hits continue to curtail production. But if I'm looking out on a multi-year basis, which I'd define as the next 2 to 3 years, there is a lot of natural gas supply in the U.S. It's just a question about getting to it. And certainly prices above $4 in MMBTU will attract a supply response, but it may not be in the shorter term that I think your show's otherwise focused on.
And then I also wanted to ask a question over on the data center demand. We've heard some sort of rumblings about how they may turn to peakers that burn crude oil for actually direct power burn. Do you see this as like a viable thing happening? And what does that mean for crude oil demand?
Tracy, I think you're bringing up a great point here that again gets to our longer term views, which is the world is going to need all forms of energy, and all forms of energy actually reinforce one another. My favorite example right now is China dumping renewables, solar and so forth into Africa has almost certainly led to the positive demand surprises we're seeing out of Africa, the continent, which I've never seen in my 34-year career. We've never had to care who makes up Africa, where's this demand coming from. I think the AI story that you're talking about, we're going to, the fact that we may be getting back to crude oil burning, there's actually a whole bunch of diesel-fired power generation that's on the sidelines as well. EPA limits its use. I think these are all sources of incremental oil demand that we will see in part driven by this AI trade.
And then moving over to heating oil, well, diesel, I guess. The actual contract, HO, is actually diesel. What is that market looking like to you? Because we did have a diesel crunch earlier this year, and obviously gasoline prices were tanking, and we had diesel prices moving higher. So do you see any kind of relief in this? And then what does that mean for the economy, since it powers the economy?
Yeah, no, I mean, I think diesel's been one of the key indicators, and it's kind of, It's the idea that some of the pessimism towards demand that people have generally had about oil demand in general, but including diesel, which is a little bit more emerging markets, since we're more of a gasoline market. Some of the strength we've seen clearly has been a sign that I think the oil demand numbers have been better, but I don't know that we have a particularly strong view that we're at some sort of peak or so forth here in heating oil or diesel specifically. I think we will be looking for diesel as one of those signs that is the demand strength going to be there? I think you'll see it in the diesel markets.
I want to shift gears a little bit with you, and you've been in the markets for a long time, so you won't mind that I ask you some questions outside energy. I want to talk a little bit about maybe your gut instincts or maybe some things that you're noticing in the marketplace right now. I mean, we have to talk about metals a little bit. I mean, everybody's watching them. What do you think it's signaling to you when you see metals doing what they're doing right now?
I actually love the question, and I think whether it's gold, which has finally really started to take off, and gold bulls certainly have been expecting that for some time. It's finally here. I think it gets to some of the timing questions you talked about earlier, and whether that was catalyzed by some of the Biden administration efforts after Russia-Ukraine to seize Russian foreign currency reserves, whether that's been a catalyst, or there are other factors as well for sure, dollar debasement and so forth. I think one of the questions is, has the incursion in Venezuela, is that the catalyst towards people starting to hoard more oil down the road? And it could be one of the bullish drivers of oil in specifically. So some of what we're seeing in these other precious metal and other metals markets, I think it does have some signals for oil, though maybe we're not quite there yet. All this oil on the water, to the extent a lot of it is sanctioned oil, to the extent a lot of it's Venezuela, Iran, and Russia going to China. I think the question will be, when China's still importing 12 million barrels a day, and as best as I can tell, their oil demand is still growing, does what we're seeing in the metals markets and some of the significant price action, especially in gold, signal that we should be more wary or more leery of the potential for meaningful upside in crude oil? These things are very hard to time in the short term. I've said that, hey, I think by the second half of this year, the demand growth will exceed some of the supply growth. That is always a best guess at best. And sometimes these other catalysts, some of these signals you're seeing in some of these other markets, I think that trying to get the exact, so this is why when I advise companies, very hard to time this stuff short term. I think some of what we're seeing in these other markets is a sign that there's more to come, especially on the crude oil side. When I then turn to some of the other markets like copper and so forth, yes, there's themes about electrification and some of the AI stuff and so forth. But as Tracy was just asking, some of it will spill over to increase crude oil demand, and some of it's just a sign that whether it's AI or geopolitical competition, this idea that I can no longer outsource and offshore everything to just primarily China, I think all that is going to be very positive for energy demand, specifically in oil in particular. And so some of those signals that you're asking about in these other markets, I think does speak to what is going to be healthy energy demand growth and oil demand growth going forward.
We've got a couple minutes left, and I want to end just on your overall thoughts in equities. Equities this year have been really kind of sideways from the end of last year into this year, really can't get any legs. I mean, we all own equities. We're always watching equities. You have a great pulse on the environment of where we are. We saw what last year was with the introduction of tariffs. This year, we had a little bit of news on tariffs, markets not reacting nearly in the same manner. What are your overall thoughts on the indexes and where we are right now with them?
So I might slightly adjust my answer here and say that if the theme was it's all about Mag 7 and it's all about the AI trade, I appreciate the enthusiasm for that. But I think, it's the Andreessen Horowitz line, software is going to eat the world. And I think what we've all learned is that all software requires hardware and all hardware requires power, i.e. energy. One of my pleas to corporate executives is you've been in this mode since 2015 where everyone hates you. Oil's, oversupplied, or there's going to be peak demand and you wasted a bunch of money in shale and so forth. And these other markets have started to move, metals, precious, and so forth. Clearly the AI and power trade, anything exposed to power started to move. I think there's a significant opportunity here, especially in some of these mid-cap energy names, to think about taking risks. I'm talking about this from a corporate perspective. I think for investors, you just have to parse through it and say, which of the management teams I believe in, which or don't. But who's going to take advantage of the fact that some of these things are 3 times EBITDA at what is, I'm going to say, maybe not the exact bottom of the cycle, but certainly a very low point. And while I'm not going to be able to time, since I'm not a trader, when energy markets are really going to take off, I think this is the time to be thinking, where do I want to take risk? And some of these smaller and non-large names, which is very different than the you only want to own the trillion-dollar companies type things. It's what I find to be most intriguing and interesting. You're already seeing that, of course, in metals and precious and those kind of spaces. I think it comes to energy. And so then it's where within upstream, midstream, oil services, downstream, some of the infrastructure names, what on the smaller end of it? And maybe we can call this a broader, a broadening trade, whatever you want to call it. That to me is what looks most interesting here right now. And I will always caveat it that I'm a terrible trader and I definitely have kind of a long-term view of these things. So,
Well, we'd love to hear from you on what's going on in energy and just your overall thoughts and opinions on the markets. Arjun, it's been great having you here today. We really appreciate your time. Thank you so much for joining us on NinjaTrader Live.
It's my pleasure. Thank you for having me.
I think the year is setting up for, again, small caps. I mean, we're seeing obviously that so far with Russell, but NASDAQ, S&P, although they're a little bit stronger today than Russell, I still think a lot of those no names, not popular names are what's going to get bid.
That's what we're talking about. And we've seen this. He's exactly right. We've seen this in the miners, and the junior miners really take off. And so it wouldn't shock me if we saw some of these kind of junior oil producers also start to outperform some of the majors that have done extremely well this year, even with or 25, I guess we're just new in this year, but extremely well over the last year, I should say, even with oil prices going absolutely nowhere.
Well, they're up. Oil's back up to 61.55 right now.
Good, because I still have those calls.
Yeah, well, I puked them. But yeah, I do think, I look at oil, it still remains a focus for me. I think that it's going to be maybe it's just a grind up this year. Maybe it's not the big explosive move we think it is, and maybe that's getting in the way of my execution of it. But I was in it earlier. I've made a little bit of money in oil. I've been too busy trying to sell rallies in NASDAQ and S&P, which have not worked. But maybe I should spend more time on oil, which I will. All right, all right, Shai. I'll see you. All right, next up we have TTrades. Good morning, T.
Good morning. How are you doing?
Good. Everybody, this segment is brought to you by CME Group, where T and I go outside of just the indexes and we open your horizons to other markets, although everybody is really looking at silver almost more than S&P these days, which is kind of crazy to say. Remember, CME Group is where risk meets opportunity. T, we've got a lot of things to talk about. I think that we have to start this time with indexes and maybe go back to metals, because it's so funny that we've got to the point now where indexes are less talked about than metals.
So yeah, I was going to start with oil.
With the business. Oh, let's start with oil. Let's go, baby.
We start with
Come on, oil it
okay,
is.
So last week we did talk about this Tuesday forming a low of the week, which it did, and we get that expansion throughout the week. It wasn't super clean, but we do get that strong close into Friday, which is over these down close candles and this one. So this week what I'm looking for is I let Monday form. It's opposing the weekly range, what I'm anticipating. We sweep out Monday's low, and we're respecting 50% of this down close candle. So I'm just looking for this to be a reversal and to trade into those equal highs that we talked about way back here. So yeah, I'm just looking for oil to trade higher here. And as you guys are talking about gas and diesel, diesel did have that pump earlier into the month, but it has taken out those previous month's high. So looking for this to maybe get a little bit of a consolidation. You can see it's a lot weaker today in comparison to oil. So maybe a consolidation there while oil starts to catch up here.
One of the things I came out of that segment and talked about is, I've bought oil a couple times this year already. I've not really held them too long. They've not done much. I mean, small winners for me. And I look at it and go, it's just been a hard trade to hold. And maybe I've set expectations too high on it to where it might start to, I thought maybe things would happen and they didn't. But when you look at it on the bigger picture, because we've been consolidating so much, does this look more of like a grind to you? Like, I talk to us a little bit about targets, because as a market goes from a grind or sideways market to eventually starting to break out, it's always hard to transition from that grindy sideways market to maybe a market that's potentially breaking out. Talk to us about what you're seeing on what you think the environment is for oil.
Yeah, so with this, I definitely want to see, like I said, into that 62.50 area. this week. That's what we've been looking for, since this reversal down here. So I do want to see that as a target, that first target. Now, this is the area where if we are going to continue this consolidation, we're going to get a reaction back into the range. But if we break through this area, then I'll just be looking towards these highs over here. So, up into the 65, 68, those areas, and we could even reach back up into the 70s, kind of just going, since this big move back in June, if we can take out those July highs, that would be nice. And like you said, I'm not expecting this to just completely go on a tear like silver, but, depending on the reaction here, we could get a nice trend this week. And then if this is going to occur, this is going to be more of a February type trade, just because once we get the end of this candle, so once we close this monthly candle, if we get an open low, so price forming its lower wick, then we can get an expansion in February. So that would be what I would be looking for in terms of targets.
Cool. All right, where do you want to go to next?
You said indices, so we can start there. So indices, we'll actually go to NASDAQ. We've been in this range for quite some time now. You can see we've been consolidating. If you look at it on a bigger picture, right, we haven't left this range. We haven't left this low. And we're just making lower highs, higher lows, right? So we're just making a consolidation. I do want to see us reach into this high. And that's what I've been looking for. We've talked about it back here, and then we've kind of just avoided it in here. But we do have a nice swing point here that we're trading off of. So looking for us to trade into these highs this week. And then it's kind of similar. I'm not trying to predict if we're going to form a reversal here or push through here. I'm just going to wait and see how price reacts in here. If we form a reversal in here, then I'm going to be looking back across the range. If we fail to form a reversal and we start to break out, then I'm just looking towards these highs here. So nonetheless, I'm looking for this high to get taken this week, ideally today or tomorrow. And then the reaction there will provide me information on if I want to look back into the range, viewing this as a consolidation range, or if we're going to break out of this range.
I agree with you. I talked about that in my note this morning. I said if the markets are going to continue to go higher, we need a clean break of these recent highs, those December highs, and then spend some time above it and set a new trend. Or if it gets back above it and we get pulled back into the range, it's like, man, we're right back to what we've been in, just a mean reversion machine. So it's kind of a little bit of a tricky area here, I think, in NASDAQ, because when you get up towards those highs, it's like, you might get a short signal on your short-term setup. And again, I think short-term trading right now is really the place to be. I think the bigger picture, obviously understanding where we are when we get near these areas and in the indexes matters, but man, this thing could really do anything up here. I mean, it could be a clean breakaway and rally, or it could be right back at mean reversion. I have no lead on it as well.
Yeah, so those intraday trading it though, I would focus on NASDAQ today. As you look at YM, right, it's consolidating. It's bearish currently. NQ has the strength, YM has the weakness, and then ES is just kind of in the middle of those two there. So if you are intraday trading it, I would be focusing on NQ. We can take a look really quick inside here. We have a little range here on ES. So for the open, I'd want to see how we react on ES here. If we form a reversal on ES in this area to go higher, then I'll just be focused on NQ, right? Because it's closer to those highs. If we fail to form a reversal here, well, then YM is probably going to be dumping into these lows down into here even. So that's kind of the two options for open for me today. I'd prefer the upside one, but that you don't really know until open. So
yeah, I mean, with these divergences, you can look at the indexes if you trade multiple ones and really just kind of pick your different side of the market you want to trade on. If you're someone who likes to be short, you're probably going to favor the Dow today. Why would you try to sell the stronger one, sell the weaker one? If you want to be long, you're going to want to favor the strong one. I know we didn't get it to RTY, but maybe when you're done kind of going over this, maybe we touch a little bit on RTY as well.
So I don't watch RTY too much. It's just not really my focus in the way I trade. But generally, it's going to be somewhat around YM, right? So it's a bit stronger than YM. So, maybe if we do get that dump off the open, RJY could be a focus to the downside as it's not really broken out and we have some nice structure down here. But most of the time when we have structure like this and that like these markets aren't correlated, right? YM's lower and Q's higher. This is where a lot of times I like to wait for the open, because 9:30 or when all that volume comes in, that's just going to provide you a little bit of more confidence on where you think price is going, and it's going to tell you if you're right or wrong. So that's what I'd focus on.
Cool. All right. What are we rolling to do next?
We can go into gold here. So this is just something we've talked about, each week as we've just trended higher here. This is not something that I want to short. I know a lot of people see this reversal candle here and they're wanting to try to short it. That's just not something I'm trying to do. The only thing I'm interested in gold and metals is swing points to the downside, trading it to the upside. Because what happens is when you try to fade something that's just trending super hard, you just get ran over. And maybe you can provide some experience on that with the indices, is what I've heard before my segment. You were trying that?
Yeah, I mean, look at I had a great trade on an S&P this year, man. I bought puts on the Sunday night open, man. I just didn't cover them, but I hold things now. I'm not in a hurry to cover things. We were below unchanged for the year. I was like, I let them go. I let them come all the way back. Not happy about that with myself. Thanks for bringing that up, by the way. I appreciate it.
Just had to, brighten up your Tuesday. So we can go into silver. So silver, we've talked about it as well. It's had this strength, kind of a crazy run this month. You see this monthly candle in December and you're like, wow, can I get crazier than that? And January just does not disappoint. So once again, this is not something I'm just trying to short. I'm favoring more swing points to the upside, but this is not really within my strategy. I'm not good at trading these things that just don't form any retracements, right? Within my model, this is kind of the last swing I could trade away from. So up here, there's nothing for me to trade until we form a new swing point. So it's more so just, it's so bullish, but there's nothing for me there. And then we can get into dollar, which we actually spoke about last week, looking for the dollar to trade into these lows, and this low specifically, which we did get. And you can see we didn't form any sort of bullish reaction here, which is what I was looking to see. Do we get a reaction bullish here or do we not? And the fact that we have not had a bullish reaction just tells me we're looking back towards this low around 96.2. So that means I am bearish on dollar. Like I said, this is something that's just trending so hard that unless I'm trading something intraday, not really a swing point to trade off of for me, but that does make foreign currencies bullish, right? So you can look into the pound, euro. Pound obviously has the strength here, reaching into these highs. The one I would not focus on is I would not trade a long yen. Why choose the weakest currency to trade along when the dollar is weak, right? Choose those ones that are actually strong and you get a better trend out of them. So
we should touch base a little bit on silver as well. Take a look at what's going on there. Everybody thought yesterday was the top. I'm not convinced of it.
It looks like a good candle, right? But here's my thing, and I'll give you guys this. I'm always focused on the higher time frame candles, right? So if I'm looking at the daily chart, I'm looking at the monthly time frame. This is a nice bullish monthly candle. I'm not going to try to fade that until what? Until a new month. So until February, I'm just bullish on this thing. Let's say February we close and we sweep out this previous month's high and then trade back in. Sure, maybe we can form a retracement or a reversal that way, but it's not something I'm trying to fade in that direction. And that's the same thing if you look at oil, right? We have a bullish monthly candle. So I'm not trying to be bearish on this until if we get a new monthly candle. But even then, I'm bullish on oil. But that's just a little lesson that I do. I'm not trying to fade that. And if you're an intraday trader, you can just look at the daily chart. If the daily chart is nice and bullish, why are you trying to short it, right? Trade with those higher time frame candles.
Especially January. All the months that I look at, when they're trending from the beginning of the month, a lot of times they trend all the way through to the end of the month. Not often are you going to see a January have a really strong month and then just give back most of it in the last few days. Which is where we are here in January with end of the month's Friday. It's hard to believe. So when you look at like silver or gold or anything that's actually been trending, oil, a lot of times those trends where they come in at the beginning of January will end January on a relatively similar note to the way that they began the month. And so I think that's really something to keep in mind because it really builds the year, builds on the year from what we do in January. We have a little bit of time. Go ahead, D.
Oh, I was just going to say you can do it on any time frame. A lot of people use it on the quarterly or even the yearly charts because, if you go to a yearly chart, if you're trying to fade this year, why not wait for a new year? Or it's really good to do it on the indices. If you notice when we're going to have a bearish year, it's just going to happen at the start of the year because we're going to have a small wick.
Exactly.
But,
no, that's
what were you
exactly
asking?
Right. I was going to say we have a little bit of time. We have a minute left. I'd like to see what you think in platinum because you've got a big divergence in platinum today. You've got it down 200. and it's much weaker than the rest of the metals. And so I was curious what that looks like.
Yeah, so you can see maybe this is when we talked about it, or I was looking at platinum here. It trades into this high. Does it reverse? No, trades into this high. So for this, it's once again, I'm not trying to fade this monthly candle. So for me, I'm still bullish on this until the month end. And then if we are going to get some sort of retracement in it, I'd want to see that at the start of February. But currently, to me, this is just still bullish.
Yeah, and so this 200-point give back, very similar to what we saw in gold and silver, just a little bit weaker, but still on the monthly candle, it's still bullish. I mean, these
I would say
moves are huge. I mean, 7%.
Yeah, the range is similar. I would just say it's a more weak candle, but yeah, it just, we can look at the lower time frames quick. Yeah, I mean, I would say this is still more bearish to me. This isn't too much of a reversal structure to me, so I could see this trading back into these lows just by treating this like a range. But
and again,
that would just
when
be
you're
into
looking
previous
at
day
the
low.
metals, I think for everybody, hopefully each and every week when T and I come on, you can look at, we're trying to give you all of the markets in a sector. So when we're talking about precious metals, it's nice to see all the different ones. And if you're going to trade them and you're looking for an area to get short because your strategy is giving it to you and you're looking at the metals across the board, they're not always going to be trending together. And like you and I have talked about, sell the weaker one, buy the stronger one, especially when you get into the metals, because they're not like the indexes where they're going to have they're going to be intertwined. These are specific commodities, and although the sector might be getting a lot of love, bullish or bearish, you definitely, when the one is weaker or the one is stronger, that tends to last a little bit longer, especially
And we'll end on a quick relative strength note. It's like if you're trying to be bullish, why wouldn't you be focusing on silver or gold? Why would you try to go to something like copper here? Because, if you long the beginning of the month at copper, you're not really going anywhere. You long the beginning of the month at silver, it's like you're up, 60%. So it's just something like that where we always talk about, Deli and I are on the same page, where if you're bullish, long the stronger one. If you're bearish, short the weaker one. Don't try to catch the one that gives you better risk to reward.
Yeah, I'll never forget a guy many, many years ago said to me, if you ever want to outperform the indexes, you have to own the outperformers. It's the funniest thing.
Top
It's just the most
10%.
simple statement. I mean, it's just the way it is, and so things are overbought for a reason. Things are stronger for a reason. So anyway, we'll end it there, T. Join T and I each and every week. Everybody, show some love for my boy T. Hit that like and subscribe button. T, we love doing this with you on Tuesdays. We're at 177,000, on our way to 200,000 soon, and we did a big giveaway when we were at 150. And wait till you see what we do at 200K. It's going to be big.
Yeah, I'm excited for it.
Yeah, hopefully we get there soon. T, you're the
You're
man.
gonna catch
Everybody
me.
check out what he's... Yeah, it'd be nice. You got a nice lead on us, man. And again, go follow and check out what T is doing on his YouTube channel. By far one of the best in the biz when it comes to learning about how to trade. Education, your channel's phenomenal, T. You're the best, man. I'll see you later.
Appreciate that. Yeah, have a good one. See you guys.
All right, everybody. Quick recap of the morning. So far, a lot of discussions really on the dollar weakness and why it's not spilling over into bonds. We don't know. Does it matter? Yeah, maybe. Who knows? We'll see. Keep an eye on the bond market again today. If it starts to get weaker, that's been something we've talked about. If the dollar is getting weaker globally, and we're seeing the bid, obviously we're seeing in metals, and we're seeing T and I just talked about in the currencies. The Swissie's up 0.75% today. Yen, euro, pound, all getting stronger. If it's really a flight out of dollars, you should see that into the bond market, but we're not quite seeing that. And if that does happen, the macro people tell me, and I know this too as well, that's probably going to hurt the indexes. So just keep an eye on that coming into today's trade. Again, here we are on a Tuesday, really a critical day. Tomorrow we have FOMC. We've got big earnings tomorrow. We've got Microsoft, Meta, and Tesla. And we're going to take a look inside in today's open with two of the best in the biz. We've got trading, we've got black boxes. We've got trading open with Merritt Black and Christian trading boxes. Boys, is Merritt in the attic? I mean, where is he?
We
You
had
get in trouble with
to
your...
we had to flee Nashville. I'm not sure if you guys have watched the news there.
I saw that you guys were getting snow. I'm not so deep into what's happening. I knew that there was like an ice and snowstorm across the entire country. What happened?
Just trees exploding every 15 seconds and falling on everything, and no power for several days, and single digit temps, and the sheriff's department coming and getting little old ladies. And I mean, it's rough in Franklin, Tennessee right now. But we just drove down to Alabama, so we're sitting pretty here.
Oh man, well I didn't know it was that bad there, but again, I don't know how much
It's pretty
that's been
rough.
covered. That's crazy, man.
Because,
Well, I'm
we
glad that
just
you're
don't have the
safe.
infrastructure for that type thing. The Northeast, I lived up there for a while. For the most part, that they're ready for these type of things. But there's just this little strip in Middle Tennessee in particular that it was just a perfect storm. It started raining really, really heavy, and then it froze, and so you just get that like half inch, three-quarters of an inch of ice on everything, and that's tough to deal with.
Yeah.
Even cell service. I have backups for my backups on different carriers and different things so that I can stay connected, and I was unable to stay connected. I went to the backup of the backup of the backup of the backup. I was on the sat phone. So
And if
here
anybody's
we are.
prepared, we know it's Merritt. I mean, wow, man. Well, that's crazy. I'm glad that you and your family are safe and you're down
Yeah.
in Alabama. That's wild. I know, like I said, I've caught a little bit of what was going on there in Tennessee, but I'm like, it's an ice storm. If I didn't know if it was that bad, trees exploding. I saw a little comment
Oh,
on
yeah.
that actually in our chat. That's just wild to me.
Yeah.
Well, again, I'm glad you're safe and you're here with us today.
Yeah,
Chris,
baby.
good morning. How you doing? He's muted.
He's
Just kidding.
muted. Oh,
I'm
there we
doing
go.
well. So you guys didn't hear anything at all? Okay, that's good then.
No, were you talking to
Your
us?
your sly little remarks. Yeah, we got a small break from that.
Yeah.
Mhm.
You gotta pay attention when Chris is talking. He's got we catch him in the clips though. I mean,
He'll keep you on your
so
toes.
he'll keep you on
Hey,
your
talk
toes.
dirty to me.
All right, let's take a look inside of the markets here today. Let's start with you, Merritt. Merritt, to me, I look at this market and go, look, you don't pay much attention to what's happening, obviously, with the macro stuff. And I've been talking about it really for the indexes. The big picture trends are just kind of garbage right now for me, at least. Like we're back up to the top of the range. I don't see a lot here. There's some macro stories that don't make sense, but you're getting a lot of movement in different markets. You're getting oil finally catching a little bit of a bid up over $1 today. A lot of movement in the metals. Bond markets, not so much. A lot of movement in currencies. What's catching your eye today?
Honestly, I'm the opposite of TTrades, and I'm quite interested in how this little guy right here resolves. I think this is a tale as old as time. And obviously, look, guys, you hear a lot of advice, people very, very adamant on this show who come on and say, don't try to catch bottoms, don't pick tops. And 90% of that is really, really good advice. You really can, as TTrade said earlier, get run over and whatnot when you're fighting a really strong trend. On the other hand, there are very, very valid ways and various situations, if you will, and contextual situations like this where it's extremely valid as a strategy type to look for tops, to look for bottoms, to look for mean reversions of things that go too far too fast. And again, I'm fully on board with the buy the strongest one in the sector. Like, I get all that. I'm not going against any of that, but there are valid ways to look for mean reversion as a style, as a strategy, and it's a lot of what I do. And silver just it takes me back to really trading equities those days where you see some of these companies that just really go parabolic. And I mean, if you really, really go back in some of the, I mean, look at this on a weekly chart. This is a weekly
it's
bar
insane.
chart. It's absolutely insane. Am I saying that we need to go down today and that this is the top and we can't go higher? No, I'm not. But I do think that we have seen this little ramp up here, and finally seeing a really, really big break. It could potentially be a spot where you start to look for some downside risk. On this hourly chart right here, I do not like the way this little bull flag is forming. To me, that is an indication of at the hard right edge of the chart, at the immediate potential next leg of this that's not a great looking little intermediate high here. But if it cracks yet again, it would be only shorts that I would look for, that I would want to touch in this market personally. So yeah, I think that over on the equity side of things, to me, it looks like we cleared out some inventory, restabilized it right here, and we're looking at these highs again. And then crude, let's touch on that real quick. As you and I have talked about, this has been a situation where the lows are of interest. It's been a big, nasty chop zone. We've talked about how if we hold these lows, we can run up to 74. So, we kind of repeat this every week, I feel like. But if if we were to come in and draw some form of a trend line just generally as to what's happened right here, that's what's happened there, right? A very kind of downward, flaggy, grindy move where we make a few little stop runs and then break it, hold it, and then today, even here as we speak recently, I mean, look at the recent couple 30-minute bars, really, really getting higher here. So, yeah, that's what I'm seeing on a couple different markets.
I like crude the most. I like crude the most
Yeah.
of anything I'm looking at right now. When I get off here today, I'll be looking at crude oil again, finding my way to either work bids or buy calls. I think it's the cleanest trade out there. Equities, again, I just have no idea what to do with it up here at the top of where we've been. No interest for me. Silver, going back to that, I think the biggest thing with that is that, now that we've made a capitulation high, it changes things to me. That's the difference.
It does.
That's where I look at it and go, now I have an area where I can lean on. But the problem for me prior to yesterday is that there's nowhere to lean on, because every time I look at the high, I'm like, it's kind of like not a great high. Yesterday, the capitulation move off the high, to me, sets the tone differently. I think into the end of the month, it makes it a little bit difficult because, again, everybody's looking at that. You've got a few days into the end of the month. Like I said, a lot of times January sets the tone for the year in a market, and a lot of times traders like us will be a little bit early. That's where I think we are right now in silver. But I agree. And I also think that once silver does set up for a short, I think the short's going to be, kind of major. And I think it'll be
kind of major
it'll be
is
chased
the way
down.
to describe it. Yes.
Yeah. So I think that it's just, for my risk reward, I look at it and go, it's a little early for me. And again, you could put a Mack truck in between the bid and offer and some options, and it's sitting in them and outright in futures is tough, especially like with kind of the size I trade. So it's like, I'm kind of like going, yeah, we're kind of close to where I can trade it, but I'm with you on that. I think you get a finagle it in short term. In the short term, you can trade it definitely short. But again, I think oil is by
natural
far
gas?
the cleanest look. I don't trade that thing.
Look at this. I think that this is I'm assuming based on what's going on with all the ice and everything, right? And all of a sudden the demand I know we were using our share of natural gas. So
I mean, look at that thing, dude. I mean, I asked I asked Craig and Shai, I go, what's going on? I go, why is natural gas up? They go, it's cold as fuck.
Exactly.
They said it. I swear. That was what both their analysis was. I'm like, great, guys. Thank you. I appreciate it. All right, Chris, let's go to you. Let's take a look inside the indexes because, man, I got to tell you, here we are again. What a kind of, I wouldn't say boring year for S&P and NASDAQ so far. Not the cleanest, at least the way that I like to trade it. I like to try to find what it's going to do in January and kind of build off it. I mean, we're barely up on the year. NASDAQ was just on the lows of the year. Was it maybe a couple of sessions ago? We're back up near the highs where all of this trading is done basically in the first days of the year's range. Not a clear trend, but we're back up to the top of the range. What are you seeing?
All right. So, I think last Tuesday, we were discussing how we were finally attempting to break this range in NQ from 25,400 to 26,000. We put in a big old fell breakdown there. As soon as we got rotation back into mags, In the last few days, we've gotten rotation back into software. So it's just a rotational market that's keeping the indices pretty range bound. And maybe in earnings, it's, I agree with you on this whole market being a little bit challenging on the higher time frames. It's definitely super challenging for swing trading as well. It's very choppy out there. So, but for the most immediate look, we just had a 2-day consolidation here, this 2-hour wedge in NQ and ES that broke out yesterday. We rallied hard into that 25,990s, 26,000 resistance. So this has been major resistance going back to December. We, of course, have the RTH gap up here at 26,120s. But since we're into that major resistance here, and we haven't had much of a pullback, I mean, very little consolidation overnight. And then right now we're consolidating at the highs. I'm wondering if this is the end of this first initial push into this resistance area, and we can see a pullback into 25,860s, maybe the prior week high, to create a good higher low against this internal form, some acceptance of this multi-week resistance that we have seen just reject price down, because we'll need that to understand that buyers are stepping in from these lows, which they did, the fell breakdown on Sunday's gap down, and then the next pullback. If we now create a higher low and start to hold up here, that'll give us more information that it's possibly ready to break out higher. For NQ, for ES, a little bit of the same. It has been stronger since from versus NQ, but maybe now that NQ is taking the lead with mags and software, we do see NQ lead, but we're back into the 6993 7,000 area. It's stalling again. We do have some divergences up here, so I'm wondering if we do get a normal, just traditional pullback after this wedge breakout to see what we get, see if it can hold. And then as far as the trade plan for today, this is the little consolidation that we have going into the open, this 993 to 7,000 in ES and 990s to 26,020s in NQ. If we can continue to hold here, it'll be tough. Maybe we trigger a fill breakdown here below prior day high in ES into 90s. It'll be tough to get bearish unless we do see continuation. And then at that point, we can go back test the 2 Sundays prior gap area, which we broke above it. We closed that gap. We back tested it yesterday in the afternoon, and that's what led this rally higher. So on a drop and failure of the 6990s, can we see this gap test again, maybe hold? If not, we see 6968 zone for a higher low. If we do hold here, like I said, then we can push up to these overnight highs, and if we form acceptance there, we'll push to 7,018. For NQ, I think maybe it can be a little bit choppy. Some negotiation can take place here at this multi-week resistance. But if we can continue to hold here, I don't see why we can't rally back up to these highs. Acceptance there, we can see higher. And if we fail to hold up here, then we can go back to this prior day high at 25,940s, 950s. Fail there, we see a deeper retracement to create a more normal.
And just know you're going to get multiple opportunities, everybody. We've been in this range 4 months, and we're now testing the top of it again. And like Chris said, there's going to be a little negotiation going on here in NASDAQ. Again, the divergence, we didn't talk about that much this morning, but the Dow was down 350. You got healthcare stocks, Boeing getting hurt. And so you have that, and you wonder how much back and forth push and pull that brings into the S&P, because it's definitely going to feel it from the Dow. NASDAQ kind of on its own in that, right, where it's not going to feel that nearly as much. And then the Russell is pretty much flat. So you don't have clean looking tape across the board when you look at the indexes, because if we're going to really break out higher, I think you're going to probably need full support. And I don't know what internals are going to look like on the open. We'll wait and see, but I don't expect it to be super clean. Tomorrow is FOMC and 3 big earnings, like we said, Microsoft, Meta, Tesla. But who knows? I mean, today could be the day where they kind of jam everybody going into one way or the other into a day where it's more important tomorrow than today, but today could be a busier day. Again, you never know. Gentlemen, thank you so much for being here. Again, Merritt, I'm so glad to see you and your family are safe back down in Alabama.
Me and my man.
Always thinking about
Me
you.
and my man, Chris.
Let me know if you need anything. Chat, you guys are the best chat in the business. Show, again, my boys some love. We're on path to 200,000 subscribers. Help us get there. Like, subscribe, and wait till you see the party we throw at 200K here on NinjaTrader Live. Guys, I'll see you. Have a great day. Be safe.
All right,
Thanks,
Dell.
brother.
Take care.
Take care. All right, all right.
So are you with family, or you guys just rented a hotel or Airbnb?
With family. Family.
Okay. When is this supposed to get better back at home?
The temps aren't really coming up for a while. It's one of those things where I forget, somebody told me the number of telephone poles and whatnot that were snapped. And so it takes time. I live way up on a hill, and I heard like backup power kind of, there's like a beep that happens when it does that, around like 5:30 a couple days ago in the morning. We live way up on a hill, and I was looking out the window, and it was like World War III. I'm looking out over this valley with like hills, and it was all the transformers blowing, and you could hear all the trees popping. So it's like, and then it looks like lightning flashes and whatnot just out all across that valley. It was a wild sight to see.
That's crazy.
Yeah. But surviving a little bit, you know, is a little bit fun sometimes.
Oh yeah. Okay.
Yeah, get to bring out a little gear you hadn't used in a while.
Feel like a man, huh?
Yeah. You stalking anything here?
We're pretty extended here on the 4 hour. I think we get a pullback. And I like to buy that pullback. I do like a higher low against Sunday's pretty big fill breakdown there that we saw. Any trades with silver? I tried shorting it yesterday, but I just insta close. Didn't have enough cushion to hold it over. And then as soon as I closed it, it just dropped down more. But it had a big reversal overnight. We're failing again now.
Yeah, if we zoom in on that little flaggy-esque thing there in silver, I guess we could zoom in further to like a 3 minute. You can see it did have that tiny little head fake through that and then fail, retest, and that's the drop we've seen here just in the past handful of minutes.
Yeah.
But guys, definitely don't try to cowboy the full silver unless your risk allowances really tolerate that. Um, with the new TEP that Apteros had launched, man, I did not realize how degenerate the average trader was with some of this stuff. We opened up the risk limits compared to what Apteros has historically offered and whatnot, and you really do see people just YOLOing and going nuts with these things. And man, it's sad to see this. It's almost like a culture of trading that's out there, guys. And I just, as much as I can, I try to be an advocate of one of the very first things you have to figure out is a risk plan. You need to be only risking, risk is everything in trading. You control your risk and then you manage your reward. And if you can't manage risk, if you can't come up with a good plan and trade responsibly, nothing good will come of that. You might get lucky for a session, for 2 sessions. You might get lucky for a month, but you won't survive. It's nothing that's going to ultimately bring you anything of value in your life and in trading. So got to figure it out. So anyways, I'll quit. I'll come off that, but come up with a good risk plan and stick to it. That's rule number one.
Damn, that video is on X. I posted it last week. I think it's 10 minutes or so. If you go to my profile and scroll back a few posts, you'll see the video. And good morning to all of you guys. It's great to see a lot of the same faces here. Really good community.
Mm-hmm.
Wait, fiber optic, Frintintin, all you guys, Lucas, Fractal, String. Can't forget about Videos Arcade. Hello.
But to me, so today my analysis is going to be a little different. I'm going to be a little price action based. I have
Oh, okay. What does
multiple,
that look like?
well, we'll see. I have multiple backup PCs with a lot of the stuff that I lean on for normal NADRO style analysis, and all of them are down. So I'm looking at naked price action here today. So for example, when I look at the S&P, this will be perhaps of interest to some of you. I start out on the daily here, and it's like, okay, general uptrend since those April big washout, right? We could zoom out further if we want to look at prior major levels and things like that, but no need here for today. And so we do notice that it's almost slowing. The momentum is slowing. If we were to start out, okay, what's the speed of things coming out of here? It's that. Well,
Yeah.
then what's the speed coming out of here? It's that. Well, now what's the speed now? It's slowing. You see how the angle or the slope of each of those is getting lower and lower and lower? So things are slowing. Things are a little bit rangy. And we can start to highlight that with some big picture levels, something like this, something like this, and then definitely this one would be a really good one. And then we start to zoom in. We'll go to a 4-hour. Okay, we can see that this is kind of the upper and lower established boundary, and that we are knocking on the door of the upper edge. So that matters. As we continue to zoom in, we're going to take a look. It's going to look like an uptrend, right? We're going to have coming off the lows, working to the highs. This is a significant area here, this prior high that we retested. And you could, if you want to get a little more granular, you could look at this high and where we're currently retesting. But remember, this big green dotted line is resistance. So we're kind of pushing into that. So, for example, if we were to come up right now with two different hypos for this session, based on that little top-down analysis, I would say one would be some type of significant break with, a hold that really kind of firms this up, and then we might look higher, be bullish. And then for the downside, I'll say, okay, well, this prior little resistance turn support zone right there, if we break that down, that would be kind of a nice little bearish scenario.
Yeah.
And then for each of the the upside, it's there's really no more levels and things like that to look at. But for the downside, sometimes I like to zoom back out and say, okay, if we are breaking down that little level, then okay, we've got the low edge of this little consolidation here. It'll be a good spot to maybe take some risk. And then really we're looking back down at the lower edge of this daily, the 4-hour type of balance area there. So anyways, that's how I approach kind of short term, but from top down, kind of taking a look at how things might unfold in a session from a price action perspective.
And you're focusing on what instrument today, or what catches your eye?
I'm definitely most interested in metals to the downside.
Yeah, this
Crude
rally
to the
too.
upside is another big one, as Crudele and I talked about. We've been looking at this thing for a long time. It's been very slow, very choppy to unfold, but really, if we were to come in and do the same type analysis, you've got this big upper zone, you've got this big lower zone. We've come off of support, we've had a shift in momentum against this kind of bull flag, if you will. And so as long as that's holding, then the risk reward is skewed to run to the other side. So then yet again, that's a weekly chart. Understand that's a very, very long-term chart. You come into like a 30-minute, you say, okay, what's going on, right? Zoom out a little bit. That hourly looks really nice. We can start to see, here's the general uptrend of what we're seeing.
All right, let's
So
see how
as
this
long as that
breakdown
persists, you can
goes.
continue to try to trade it.
NQ weak, yes,
Natural
down.
gas down. One thing that's just kind of, I forget if anyone talked about earlier, but daily chart on treasuries now, this spot here is of interest. It's kind of where there was resistance and then we broke it and we held it as support, 3 times and then couldn't lift, couldn't lift, couldn't lift. And you start to compress into this area and now it broke. So that's a market where it's like bearish underneath that 112, 7.5.
So I'm watching if this possible failed breakdown here in ES and NQ holds. This is the support it has to hold for some sideways to higher action. But like Merritt said, we are at resistance. NQ is at major, major, major resistance. So it can be choppy up here. It's wait and see mode for me. Let's see what the reaction away from here.
If I get even more granular here on like the 3-minute, those lows are certainly of interest. But right here in the open, and that could be a very early tell for kind of an over underline in the sand. If I'm only using price action, will I look for any confirmation if we hit my levels of interest? Yeah, a lot of people think that my entry execution a lot of times is order flow driven. It's not. A lot of people think that it's some indicator driven. It's not. I always say that my order execution, it's really based around concepts of rhythm. While I don't have, a market profile up, while I don't have VWAPs up here and standard deviations like my normal type stuff, you'll see that when it comes to entry timing and execution, it's where's the acceptance relative to a level of interest? Where is the rhythm, a counter rotation that I can fade to align myself? And then the entry timing, it's the momentum shift from once, if I'm looking long, we've rotated down, it starts to turn up. So a lot of that is grounded in naked price action, and that continues here today easily. Crude, wild swinging. But you see, one thing to just make a quick point on, guys, if that little level right there, right, that we were just looking at on the 3-minute, this guy right here, if you get too fixated on it and you just zoom out to the 30-minute, take a look at all of a sudden how insignificant that level is as opposed to 6970 or this major 7007 level. You have to keep that hierarchy in your mind. If you lose sight of that and all of a sudden you just get sucked into the 3-minute and it's just your absolute, all you're focusing on is what's going on there, you lose the forest for the trees, as we often say.
And between ES and NQ, pretty divergent tape here. Yeah, click that like button, guys. Let's get the likes up for Merritt trading just price action. Just go at it, Merritt. See what happens. Press some buttons. So if NQ can't hold this 990s, which is resistance, we do have an area of interest here into Friday high, which we're stepping into. And if that does not hold, then I'm looking at 860s as a reversal opportunity. NQ has followed through to the downside. ES is finally following along. Yeah, pretty strong rejection. Looking at the Qs here, 629, 630 is this 26,000 area in NQ. Major resistance here. If you guys can see this chart here, the Qs. This is what needs to really break out to really see a new multi-week trend higher. So now that we've rallied from the lows, are we at a point where we're going to consolidate, see a daily pullback to create a higher low, and then maybe form some acceptance up here at resistance? I think so. We'll see. He is holding really well here, though. What is it? Cyclical is holding up. Yeah. Industrials, healthcare is green. Consumer staples are green. Banks are green. So it's tech here that's weak. Energy's strong.
I took this picture early yesterday morning.
What is it? Oh, the trees are down?
Yeah, but just look at the forest, how it's just like glass.
Yeah.
Wow.
I mean, it looks like a cool background picture.
Now, while S&P is not the most interesting market to me here today, I am going to
An
continue
H. Oh,
to comment on it and to describe it because I feel like that's one of my main teaching markets here today of like, okay, we went through some scenarios, we went through top down, and let's just watch how it unfolds. So right now, what I would say is that well, as it drops as I say this, very short term, we know we were this 3-minute level that we marked holding below there, and you saw a couple times they just retested into it, and so sellers holding below that is again, that's the very first indication of what's going on. It's the very first clue as to what's happening. So we've tagged resistance, super short-term level has broken down. Recall that our bearish scenario, however, for a trade is not until we were to trade to hold below this. So really, this is actually a no trade zone, right? And used to what I would do would come in and potentially mark something like this, color it red or whatever. Like that's a no trade zone. Price has to literally be holding above that or holding below that to get involved. And it's little visual cues like that can just remind you throughout the session of things like that.
Yes, my attempt to fell breakdown here. NQ tagged prior day high. Saw a little bit of reaction. We do have a lot of earnings coming up in the next, I think starting today. So you can also see midday and later some just sideways chop. And this is probably a day for to keep risk down, as I think it can be pretty choppy up here. Yeah, what happened to UNH? Jesus, what a drop, huh? Mr. Market. Nice back up.
So I'll say, yeah, so this is critical, guys. I say critical on the short term. So 69.95 is that 3-minute short-term level. We talked about, okay, bearish below it. They're probing below it. Now that is testing for change, right? If they can start to hold a couple of these 3-minute candles above here, then all of a sudden, again, short term, not a part of our major like 30-minute hypos for the session, but short term, you start to hold above that level, it puts us back in the immediate foreseeable future, puts us back into retesting that that upper area of resistance. You could also come in and you could put in one more short-term level, and let's do that. Let's put something right here as well. So we're layering all these things. You can't forget what's going on the daily. You can't forget this 30-minute picture and our main hypos for the session, but you can have a more granular view. And so we'll keep an eye on that. So far, buyers were not able to hold it inside that level. Key distinction, right? I said if we can hold a couple 3-minute bars, that's acceptance, right? Starting to see either time or price acceptance into the zone back above 69.95. So far, sellers once again have rejected it. So
Oh yeah, that's right. Medicare flat rates. Yeah, NQ still weak. ES, better candidate here for a fill breakdown if it can hold and form some acceptance, but not the best structure here to engage in ES at the moment. For me, I don't know, for about naked price action Merritt.
What, NQ?
Or yeah, so when you're using raw price action and you're trading that, I understand your main trading style for scalping, but are you looking to apply the same just with just looking at raw price action? Your stop is right at the edge of that counter trend, short or long you take.
Yeah, the in terms of actual entry timing and stop placement, yeah, it's really no different. I would come over here to Tradeovate, and I'd use my normal like volume based chart and get that nice, granular kind of view of what we're seeing. And if I was stalking along here and like pulling the trigger on a long, then my stop's going to go below the swing. Or if I'm getting a little cute, I might drag it and up into here. If I was shorting this turn here, well, then the stop's just going to go kind of beyond there. And oftentimes I scratch out of trades before they get to a stop based on the speed of tape and order flow, even sometimes. But yeah, for naked price action, I'm looking for what we call laws of market dynamics, right? Right. We've got this shortest term zone from 95 up to 7,000. And if we start to accept back above 95, that's going to be, as you like to talk about, a failed breakdown of an area. We get acceptance picture back above. I'll look for some type of small counter rotation on my lowest like volume based chart. And I'll look for a momentum shift. I'll place the stop beyond where we kind of had the momentum shift from. And I skew risk reward in my favor and flip the coin, see if it works out.
Yeah. Yeah, now you're talking dirty. That's a good hammer doji candle on the 15-minute in ES. So the breakdown attempted here, we have a lower low, bounce all the way back up, no lower high to continue lower in ES. So from a 2-minute trend following perspective, the immediate push lower didn't have any sequence lower. So that is a micro look at a reversal coming up. But now you want to see if it'll hold. This is, based on where we are, being so close to resistance, being that we've rallied since Sunday's gap down pretty aggressively. I think it can be choppy up here. And maybe a back test now of 93, hold from some acceptance, and then rally to 7,000 and overnight highs at 7,000. And what is that? 5. Stop it right there. NQ, where is that against? NQ had some support on 990s that it broke. So that's really what has to be reclaimed here. Right around here. So this bounce can just be a back test until we can reclaim it and then form some acceptance. And then that can set up a move higher. We're in a multi 4-hour consolidation. This is the first real pullback since yesterday's big breakout out of that Thursday, Friday, and Sunday consolidation. So this is still bullish action. And if we are able to reclaim and hold, yeah, ES is much stronger. Then that can set up longs for higher. Silver just rejected nicely. I missed, I do want to short it.
So not only has the S&P failed the breakdown at 95, we have now traversed quickly all the way to 7,000. So what's another, short-term scenario? Well, some type of nice break and hold. But we could still trade a retest of 95. It's not as good. But this is a super short, 5-point range here of this level. So we're starting to get into really, really short term here, which I know many of you do trade. But another scenario is the break and hold of 7,000 to go push up into 06, 07. But again, don't forget the main high posts. Nowhere near coming into play yet. We'll need to see a break of 7,007 and some type of pullback to get long to go with that. So looking like that's going to be the scenario. So we'll continue to monitor. One thing it's always nice you can do is, set some type of alert. Super easy to do. And then just be connected to your phone or whatever, even if you're away from the screens for those alerts. When you need to put attention into a market, you're there.
So something I want to touch on here for my approach is on these reversals that you guys see me take, where we have a low and then a bounce into the 2-minute 9 MA to create a lower high. That is usually, that candle's high into the 9 MA is what creates the lower high and what really sets up the trigger for my entry on a reversal. And what we see here on ES on the 2-minute, this green candle shot up above the 9 MA and into the 2-minute 50 EMA. There was no lower high into the 9 MA, this black line, okay? This candle closed all the way above here. So that doesn't meet my entry requirements. So, one of my scenarios was to look for a possible fail breakdown down here at 69.90, 93 area. And we are seeing that, but there was no entry trigger for me to participate in this since the structure didn't set up how I take it. Now, the data tells me that usually this is a sign that we're just going to be in a mean reversion environment where we're going to go to the other end of the range, which is this overnight highs, and then possibly pull back and then just create a larger range. It may happen, it may not, but that's what I've gathered over time. And therefore, I can't take an entry all the way up here because I need it to be into the 9 MA down here. Because over time, what will happen is if my usual risk is, let's say, from the 9 MA here into the lows, and these are my R multiple targets, if I'm taking trades where the candle closes significantly higher, and even though it doesn't look that much of a difference here, it's only a 69.93, it's only a 2-point spread, but that's not always going to be the case, right? It's going to be significantly higher. When I do that, my R multiples they expand more, and I'm not able to, one, position myself the size that I need to, and then also capture the R multiples that I'm looking to capture in that trade. So I just wanted to touch on that because we did see a fail breakdown. This is the scenario that I was looking for here, but the entry rules were not met. So I have to be okay with, well, I'm not really missing anything because my entry rules weren't met. So I just have to continue to wait. And says, okay, well, what could be next? Well, can we then hold up here, form some acceptance? If we can hold acceptance above this overnight highs, then I can apply my directional setup, which is a continuation wedge structure that you guys have seen me trade, into the next target for scenario 1.2 at 7,018. If that doesn't happen, then we pull back and create a range day. But beautiful reversal here if you're in it.
No
He's
lies
back.
detected.
So let's see how we react up here.
Another thing that I would point out is a feature that I now see because price unfolds and we see new things. Going back to the 30-minute on the S&P, we reached that major resistance, right? What did they come from? It's like a daily level, right? It's not precise. We really shouldn't treat it as a super precise to the tick level. But reaching the area is significant. So if we look at this 30-minute chart, once we touched resistance, right? We had this resistance. We finally broke it. We retest. We go to the big daily resistance. What did price do after it tagged resistance? What did it do? Remember how I was drawing the arrows with the angles and the momentum? Well, what does it tell us? It's a shallow movement. Sellers did not see some huge, I mean, look at some of these moves that we see. Huge moves, big, strong bars away from areas for whatever reason. We didn't see that up here and are not seeing it. In fact, you could say that we're still kind of in this general pattern, which is flaggy, weak, not a ton of sellers from an area. And then you get the, on the short term, again, you put these things together, you get the head fake below a short-term level, knowing we're at resistance, but we're not finding a bunch of sellers from there. So it's beautiful stuff. I think last week someone asked me, what did they ask? Something about like, do you use multiple time frames? And my answer was, I can't breathe as a trader without multiple time frames. That is the analysis, right? It's not just looking at a 3-minute chart or whatever your favorite chart is and saying, yeah, this is what I'm seeing, is what's going on. No, I think the most powerful analysis is when you are putting together things like we're doing here today, which is, okay, here's the big structure. Let's zoom into that. Okay, here's the trend structure within that, and how we're reacting or not reacting, or and then looking at more granular levels in between. It's a really good way to analyze markets and find trades.
Yeah, multi-time frame analysis is, I think it's really needed for everybody to understand the higher time frame context, to see what a participant is actually leading. You see a gap up and you want to short, but is that a gap up into a new uptrend attempt? Well, you won't know that if you're not looking into higher time frame.
Yep. Do I scale on a good trade or once all in? I'm assuming you're asking if I scale into a trade or am I all in at once? Yeah, I mean, for all intensive purposes, all in at once. 9 times out of 10. Yes. I'm not a big let's piece into this thing. I don't care if it's, however you want to think of it, as it goes against you, as it works in your favor. I'm looking for very precise moments where I think risk reward is in my favor. This tape is looking a little squirrely. And I'm trying to get my full size on at that moment so that I maximize risk reward for being good at timing. If you're not super good at timing, that may not be the play, right? There's this thing in trading I've come to learn where you want to pair up the strengths of what you're doing with the tactics that you're applying. And it's a bigger deal than I ever realized for years trading. If you're really, really good at short-term timing and seeing momentum shifts and speed of tape and order flow and doing those things, you want to pair up the majority of your stop placement, your trade management, how long you're staying in a trade, when and where you start to pay yourself if it's working. You want to pair those things up with that style and with the skills that you're bringing to the table. It's like a good golf swing, there's this thing called matchups. If you're doing a certain thing at the top of the swing, you might need to make a compensation as you come into impact to match up what was going on here with here. It's the same way with trading and the styles that you're applying. You could be doing two very good things, but they could be mismatched in a way. So I will say it's good to see volatility. It's another big lesson for you guys is that these things ebb and flow over time. Knowing what kind of volatility condition you're in is a really big deal for knowing what you can pull eventually out of your little bags of tactics and tricks and strategies and things. It matters. Let's check on the S&P. Not much has changed here. Couple of 3-minute bars as we yet again hit that big picture resistance. Let's recap it because I think if you guys are, surely there's going to be some people out there that roll their eyes at this. They're like, yeah, man, you've told us. But I'm telling you, if you're anything like me, you need to hear this a couple times. Start with the daily, get some really nice big picture zones. They're not precise, they're just zones, they're just areas of interest. And we can start to zoom in. 4 hour, nothing super new to see. We could start to highlight zones like we did right here. But pretty much everything here matches up with what we were looking at. We could add another. Let's change the color of this just to make it stand out. There we go. Zoom into the 30-minute. Pretty much the same level. We could start to get granular. In fact, I would say let's go ahead and mark this one. We talked about it when we first did the prep. And guys, one thing that's super interesting if we pause here, if we were to pull up volume profile on this, it's going to give us the same levels if you use it the way that I use volume profile. If we were to run a volume profile of this area, what's it going to look like? What's it going to look like? If we were to run volume profile from here to, let's say, right here, in terms of time, it's going to look like that. That's what it's going to look like. You've got this wick area down here. You've got this wick from where it breaks out, and you've got a lot of choppy balance trade in here. And that's why that's going to be the shape. And so that's going to be like a value area, right? So you can visually do a lot of the same things. And it's actually, HVN, LVN, they're the same thing. And people could clip that and take it out of context and say, look at how stupid Merritt is. He said HVNs and LVNs are the same thing. But bear with me. LVNs are just a certain edge of an HVN. They are. I see profiles as just one continuous type thing. Yeah, exactly. Full gluten. It's the same. It's the where does the HVN start to get really, really thin? That's where it becomes an LVN. It's all one distribution of things. So, anyways, you can do a lot of profiling type work, especially if you pair it with what we talk about, like laws of market dynamics. Excuse me, where you're literally having some rules that you can apply based on what you're seeing, where price is holding inside or outside of the value areas or the HVN or the LVN, however you want to think of it. So anyways, break, hold out of this short-term 3-minute zone, or 30-minute, excuse me. And then if we were to focus on the 3-minute as to what's happened here to overnight and today, hello. Sellers have reacted from our area of interest. We have the same type thinking of this zone. It's an HVN. And what have I done? I've highlighted the 2 LVNs on the outside of this HVN. Or just think of it as a price action. So let's continue to watch this. Rejection from the big daily resistance. We could look for a short, remember, one more time, the hypos are there and there. The hypos are long on holds above 7,007 or shorts on a hold below 69.70. But in between, we're just doing more and more analysis just to get us more reps and to see and to have something to talk about and to do. So new hypo, short-term hold below 7,000. If we can get a nice hold and pull back below 7,000, what does that put on the table? 95. If we hold below 95, what does that put on the table? Our big, important 69.70. Hey, man.
Little emergency, but I'm back. Out of breath.
Everything good?
So, yeah, I just left the car charging overnight, the electric car.
Oh.
And I had to go disconnect it because I was getting a pretty hefty bill from all these hours of charging.
Wait, it doesn't have some type of, I would have thought it would have some type of governor, where like if it's fully charged or whatever, after however many hours it takes, it stops drawing power, no?
It does, but that's the second part. After 5 hours, it starts charging $20 an hour. And then at a certain point, it'll stop and disconnect. But I do think they're trying to maybe make their money,
And that's good money too, because it's not actually costing a lot of electricity.
Yeah.
Huh.
Yeah, because it takes, with $10, you get a really good electric tank fill. But guys, to go back to what I was talking about, remember this comment that I made earlier on this candle not triggering correctly on the reversal, and what that usually means based on my data is that the reversal will probably only move up to the edge of the range, in this case, overnight highs, and then shoot back down to create a range. And that's exactly what we're seeing. We failed up here at 7,007. We rejected back down, and we're confirming the range that we're in. We still need some little bit of acceptance up here at the highs to then see significantly higher. But the way this reversal set up sort of gave you a heads up at what could happen once price got up to the top of the resistance. So now let's see if we NQ much stronger though. And missed a good silver short running for my life.
I forget if it was. I'm gonna look at this guy in the chat, what his trade was. There was some guy I know that bought, who were saying that they went long right when we got up to the main kind of resistance area up here. I think that's why, and obviously, look, you don't need to trade the exact same way that I do or Chris does or whatever, but like, um, there's this term that him and I both use, and it's something that I developed and he copied, and it's called acceptance. And
Yeah.
it's a really, really big deal. And I just want to draw for you guys real quick just to teach. If you have rotations that are like this size, this is the way the market's ebbing and flowing, and you might be at or above an area of interest, especially above, that is not a good place to get long. It's only a good place to get long after you get, let's call it, the majority of an average rotation size that is that is beyond the area of interest. Once you get that, that's when I would call the acceptance picture to now be above the reference in question. And that's when you can go into stock mode. That's when you can say, okay, execution tactics, whatever that is for you, buying dips on RSI or MACD or looking for small price action patterns or whatever it is that triggers you into trades, you can now go and apply. But first and foremost, monitor the acceptance picture. And that is what then gives you the green light to go apply execution tactics. Once that clicks for you, it's truly a game changer. It's a big, big, big deal.
Yes. Let me just copy some other things that he said in the past in life. In between where you're looking for something and then where you now filter into execution mode, that's what happens there is that you at that point know what you're looking for. And that's so important because that's what gives you confidence to hold the trades. That also gives you confidence to know where your stop should be and respect it and not look to get back in if you get stopped out. Like there's so many things around that, but it's in the step-by-step process to identifying the locations you're interested in, to waiting for structure to confirm something that you want to see. And in this case, we're talking about acceptance. Once acceptance is there, and we have different views of that, at least I created one thing, right? My view of acceptance is different from his. But once you understand that this acceptance can mean, okay, either higher prices based on higher time frame structure that's continuing to rise higher, and that could be into the next resistance level. And like you said, you can buy pullbacks, you can do whatever you want. But it's that repeatable loop, right? The feedback loop that I talk about, it's through that process creation that eventually gets you to a point where you are then just waiting for the things that you know you want to see to happen. Like I highlighted this fell breakdown in scenario 1, right? That was my main scenario. But what was I looking for? Something that I know very well that can allow me to manage risk. Did that happen? No. So even though the scenario took place, a way for me to manage risk on that idea did not happen. So I was confident in missing the move. I was not chasing it. I was not beating myself up for missing the move.
Mm-hmm.
Like there's so many things around that. That's because, again, it's something that we're looking for, because we know now that we can manage risk consistently over time by waiting for exactly what we're looking for. And as you're starting out, maybe some of you guys are starting out, you're not exactly there, and you're find yourself taking these entries that you go back and review and say, oh man, I shouldn't have, or why did I enter, or I took it, but I took it off because I was scared of losing money, et cetera, et cetera. It's this feedback loop that you have to go through and iterate over time, and just improve and get better. And one last thing I'll say about this is that if you're consistently trying to be, I know a lot of you guys trade prop firms. If you're trying to these challenges, if you're trying to pass these accounts and focus more on that, that's going to be more emotional decision, and it's going to rob you. We say it all the time, it's going to rob you from the opportunity to learn what you need to learn, so then over time that you have that confidence to know what you're looking for, instead of chasing a payout or to pass that evaluation, because at that point you're just trading the money and you're just shooting yourself in the foot.
Yeah, that ties in with the whole relaunch of Apteros and what I'm doing. If it's I've seen for a couple years the nearsightedness of how a lot of people are being brought into and brought up in the trading industry. And our whole thing is build a career, build something that's sustainable, build skills that last a lifetime, right? And building skills is hard, right? Building skills is not getting lucky on a trade. Building skills is a lot of work outside of the open and closing bell. It's a lot of work on your mentality, your belief systems. It's a lot of work on understanding what's working, what's not, how are conditions changing, of
Yeah.
honing in on a risk plan, of honing in on your edge and your best setups with edge. These are the things that sustain a career where you can actually do something with this, not just make a quick buck. It's a really, really big deal, and it's one of the biggest drivers of Apteros as a whole, is to provide a place where people can do that.
And look, you guys, either have a business, have had a business in the past, or work for, in a business where if you have a season, let's say you have a seasonal business and you do really well during the summer, that's where you're allocating your capital for labor, for marketing expenses, because you're getting that return in that busy season. So if we're thinking about making trading a business, well, where can you allocate risk capital in what areas, right? I have a mean reversion approach and a directional approach. The mean reversion approach is into support. So I can allocate my risk capital in this area. It's the same thing as a business. If you have a business by the beach, you're not going to be putting a lot of labor costs and marketing costs during the winter. So you're going to do that during the summer. So you need to identify what that is, because at that point, it's just a repeatable structure over time. Every summer, what you put in and what you could extract on average. So it's the same thing here. That's what, when we say make it sustainable, repeatable, it's identifying where you can consistently allocate that capital risk in a way that produces, a certain return over time, and then just execute there. Do that, get better in those areas if you want to trade by the edges, or wait for acceptance if you want to trade directional structures, right? Don't just trade to chase. Like there's just a big gap there between where we usually start off at and to where we want to be. And that, one of the first things would be to be okay with missing a lot of the moves, because 60, 70, 80% of the moves may not meet your rules. And you over time, you just have to be okay with that.
Yeah, there's no other way to operate. It's foolish thinking to look at a chart that, everybody looks at the big moves, right? Whether that's like big, or just big for the day, doesn't matter. Everybody looks at the big moves and they say, "Oh, I missed that. That's what I should have been involved in. That's what I want to trade." It's a fool's errand to look at a move and to kick yourself and say, "Oh, I knew I should have been long this day," or whatever. No. What does your process allow for? What does your execution allow for within that? And that's all that matters. So real quick to the S&P here. Head fake below our short-term 3-minute balance zone. We broke. We went to the daily resistance. We pulled back. Buyers found on the retest of this break from the 3-minute zone. Now we're pushing back into the resistance. I don't expect it will hold this time. A lot of times, multiple pushes into the same area, especially like the third time. I know this is kind of the second time, but I don't expect this to hold this time. I'm not in the business of predicting what's going to happen next, so be very careful with what I just said about not expecting something to hold. But I'm applying a principle. The principle is, if we continue to knock on the door, and if we continue to revisit a certain price, then the auction is likely not complete in that area, and therefore it needs to continue to auction higher to find eventual excess. So I'm not predicting, I'm not saying, oh, it's going to break. I'm saying that's the more times we revisit this price, the more likely that is. And that's a true thing. Doesn't make it a trade for me. I'm just commenting on it.
Because that can happen, but then your entry rules aren't met. So
Exactly.
you just have to let it go. But over time, that builds up your understanding of what you do want to look for, right? Because just because we had a bouncer from the level that he has, doesn't mean it's going to produce the move that you're looking to participate in, or it can fail easily. You need other additional rules. There are layers of rules where all parameters are met, and therefore you can, that's how I see it. Like, it's just, if you can create a template of your rules and just wait for price to meet those every time, and you're not going to make money every time, but those parameters work for a reason, and just have to stick to
That's
them.
not the nature of an edge making money every time, right? That's not how, I love to think of trading as being the house, being the casino, right? Does the casino expect to make money every time a blackjack hand is dealt? Every time that little roulette ball goes around the wheel, do they expect to make money? No, they don't. That's not the game they're playing. And that's not the game we're playing. It's the same thing. It's win percents, unknown what's going to happen. There's a distribution of lumpiness of, a string of losses, a string of wins. It's a random distribution, but it does form a distribution. We don't know. We don't know. And the game is not that this one needs to work. If you allow your mind to go to a place of this one needs to work, this one should work, this one has to work, you're whipped, you're beat, you've lost. And that's what I meant earlier when I talked about the work of building something like a career in trading. One of the things I mentioned in that list was your belief systems. So what I'm talking about right here, right now, is helping some of you reframe a belief system, more of that think like a casino type of mentality. Let the numbers play out over sample size.
We're consolidating nicely here. We're now creating a wedge. I can see this fell back down though and create a range. I continue to think that this is It's more consolidation. I just don't see us breaking out higher of this multi-week range before earnings.
FOMC, yeah.
Yeah. Oh yeah, we have that tomorrow as well. There's a lot of strength though in tech at the moment. Semis back up. Software, I think software bottomed. Pretty big gap up in names like Crowd, Net. All we're seeing is rotation back from what was leading cyclicals, defense sectors. Small caps were on a tear, and now we're seeing it back into tech.
Let's both answer this question, Chris, of men and men's. You guys have or have you had visual trading templates in front of you, or currently or back in the days to have that system get ingrained in, for those high intense moments when FOMO might take over, you tend to chase. This could be one of the most practical and beneficial things that you and I could answer all day today. And it could bring together a lot of what we've talked about.
Yeah.
You want me
Can I
to
start
take it
it?
first, or?
Yeah. I actually do have templates. Let me see.
So I know I've heard Christian talk about building out his playbook and things like that. So, I while he's finding that, I think that I haven't had a visual template in front of me, like a picture that I'm trying to look at as I also look at the charts and saying, oh, look, the pictures match. I'm not sure if that's exactly how you're asking, but I've certainly put in a tremendous amount of work of taking a ton of screenshots of things that did happen and notice a pattern and document it. Notice the pattern again in another market on another day, document it again. And you start to build that out. The thing that I do, you end up building a set of rules, if you will, or you could think of it more like a process. You could think of it more like a checklist that needs to be met in order for you to be bullish or bearish or to pull the trigger or whatever the end result is. I think you end up in more of a checklist format is what you put in front of you. I know that I used to use a checklist to literally do my prep. Check this. Okay, the result of that is this. Okay, next, step 2, check this. Okay, check this, go write it down, what I think about it. And I would literally use a checklist to do my prep. I would literally use a checklist to give myself permission to scale out of a trade. I would literally use a printed out physical checklist to enter a trade, to flatten a trade. I had a checklist for all of those things, and it all derived from all those screenshots, all the process, all the reps in order to kind of know what it is that I should be doing. And yes, you're right. You hit on a huge thing about when the stress is high, when the FOMO kicks in, these type of things. You just have to have a little bit of self-awareness that you do have that impulse, that FOMO to maybe do something. And you have to say, wait a second, let's go to the process. Let's go to the checklist. I've got it right here in front of me. Let's go to it. What is that leading me to look at market generated information, not my own feelings or emotions? What does that tell me to do here? And that is just, that's everything. But now you got to put in the work to develop those things. You can't just sit down as a new trader without putting in the work of building a playbook and say, yeah, I'm going to write down a checklist today and that'll make me make money tomorrow. No.
Yeah.
You got to put in a ton of work, a ton of reps, and it's going to iterate over time. You're going to not be the greatest at first, and you get better and you get better and you get better. And sometimes it feels like you're getting worse while you're getting better. And yeah, that
All
would
right,
be
so
my answer. It's a great
I
question.
have the visual here. I also did take a short. I do think we're going to be range bound. So I took a short on the break of this little consolidation. I have a very tight stop right on the other side of this breakdown candle. I have a, what is that, like a 4-point stop. And I'm looking to see if we move back down to 69.93, a partial along the way. If we do see a little bit lower, but while that's cooking, see if it works. So this is I mean, I have a different kinds, but this is some templates that I created for what you guys see as the wedge. I call it a 50 EMA wedge. I created this a while ago. And it's just different over time. What I've been able to see is that all wedges, all consolidations are not the same. So what I did is I collected hundreds of examples over 2 years. And within those examples, I then were able to classify them into a smaller set of wedges, right? What does an aggressive wedge look like in an uptrend? What does an aggressive wedge look like in a downtrend? What is a classical wedge? What is maybe in a low VIX environment? What is a wedge into support? What is a wedge into resistance? Right? So I was able to classify them and say, okay, here are 30 examples of this. Here are 30 examples of this. Here are 30 examples of this. Over time, that collection allowed me to understand what the structure behind that consolidation, the higher time frame, possible scenarios into that structure. So this here is a collection of that. This is an aggressive wedge continuation where we have a typical 90-MA uptrend. We pull back into the 20 EMA. We have a very short consolidation and we break out, right? I'm not going to go over it in detail with this, but you get the idea here is that I've recorded videos on this. I've not on here, but I have another page dedicated to just hundreds of examples of this where I write notes, I write on the charts, and I just created my library. This is my library. This is the aggressive final stuff. This is the classic, what a classic consolidation looks like. Where are the turning points? How does the higher time frame look? This is a rare example of a wedge. This is a deep test of a swing higher, swing low before a reversal, right? But this is a small example of a larger set that I collected, and then I was able to bring down to say, okay, I have now 300 examples. These are the 6 or 8 most repeatable ones, and I'm just going to focus on those based on the rules that was able to create based on all of this. And before I get off this, do not request to send it to see this, because every time I share this, you guys are sending requests to see this. But yeah, that's my visual template. I do that for every setup. I have that for reversals. I have that for other ideas that I had in the past.
You know how a lot of times when we're streaming, you put on a trade and I'm like, great trade. You know,
I do, but what you're saying, you're thinking not a great trade here?
this is not a great trade.
Yeah, it looks
No,
like I'll get stopped out.
well, I mean, anything can happen, and obviously you are your own fantastic trader. But a lot of times I see it, like when you take them, I'm like, yeah, I see it. I don't see this one. Walk me through it.
So the idea here is that
Where's the wedge? Let me see your screen. What time frame is the wedge on that you're
the
using?
2-minute. That's
Okay.
what I primarily trade on for the first 2-3 hours. So the idea here, I mean, this is a counter trend trade because we are in an uptrend, but the idea here is that we would remain range bound on a break lower below this consolidation, because we did trigger a little micro failed breakout here. We moved lower, so I took the short thinking that we're gonna go back down to the bottom and create just a consolidation day, but no follow through lower. It's just we're I may be late or I may be early, but we're just super extended up here on the 4-hour based on my trend structure readings. So I do think this is a consolidation day.
Okay. Okay.
But all we did on that second drop here was test that 7,000 area that you highlighted. How do I remove this? What's going on?
Yeah, one guy. I got I got Crudele. He got a little chuckle out of that trade comment. Um, One guy was asking in the chat. Let me find it. Where is it?
Yeah, tech continues to be so strong. NQ is probably going to that RTH gap. And then maybe at that point it does consolidate.
Trend and range is dependent on who you're asking. And by I mean who, I mean what time frame, right? You're where you're measuring that from. If when I look at this on the 30-minute, there was a range which was failed below. That's funny how fractal everything is. Hey, is this a chart of today's open? And what's happened? Oh no, that's yesterday on a 30-minute chart. Right? Consolidation, fail below. This one actually gave a nice retest, which is what a scenario we talked about. And then it broke and then retested, and here we are. Now let's go to the 3-minute. Look at today. Oh, look. Consolidation, failed break below. It didn't give a retest. It's a 5-point range. It's hard for that to happen. Reach major resistance. Couple retests now of the break of the upper edge of the 3-minute. And here we are knocking on the door. Remember, this is time number 3. Time number 2, I was saying I didn't think it was going to hold. It did hold. This is time number 3. And one of the things I said earlier was number 3 is not good for holding. There she goes. Not a trade for me. It's just a commentary on what we're seeing in real time.
Mena, it's usually the 2-minute or the 5-minute that I use to execute on. Most of the times the 2-minute and the first 2-3 hours is because the scenarios that I share here usually complete in the first 2-3 hours. So the way I see it is, if I showed up and I traded my scenarios and they're complete, then by 3 hours then there's really nothing else for me to trade unless I create new scenarios for the afternoon. But at that point, the main areas that I'm interested in probably already got hit and we held or bounced away from there. Yeah, it's strong. That was a nice little break here in NQ. SPY is just a rock throw away from new all-time highs. Wow, core finally broke out. Beautiful.
Core, what's that?
It's a stock that I'm long.
What is it?
It's a semiconductor company. COHR.
Hmm.
Engages in the development and refinement of engineered materials, optics. Yeah, just in the semiconductor space.
When I hear optics, I think Aim Point, Trigicon, Night Force. Way to go, Austin.
He was ready.
A little too ready with that.
I know. That's his favorite soundbite.
Oh,
He's like,
man.
please say something where I can push this.
That was great.
Oh gosh, I'm sorry if you blew your account today. What happened? We had a big lesson class today.
We started with that. They must have just signed in.
Chris, do I ever flip your trades? Not really. Like if I'm looking for a bullish reversal at support, what needs to happen? We need to break that support, form some acceptance, which can take 30 minutes, an hour, and then see a breakdown from there. So I can't possibly, before I actually became more patient and more disciplined, yeah, I would flip short. And sometimes into these breakdowns, for example, if I catch a breakdown from here, it still made points, right? So you still captured a good amount, but you can say, well, your objective can be, I'm looking to short this breakdown, knowing that we're going to come into support, partial out there or close it all, and then look to get long in the reversal of the failed breakdown. But I feel like, not a lot have a trading awareness where they can confidently approach it like that. Like they may be too emotionally invested in the short and then not be ready to take a long and miss the bigger move. So it's better for me to just focus on one side, which it's usually in alignment with the trend. I would say 80, 90% of the time, because shorts into support, like we had this morning, let's say you're risking one and you make two. Well, the long into a failed breakdown of support, you're risking one to make six. So over time, I want to focus more on those opportunities. There's no reason for me to flip short if I'm looking to make more on my trades over time in direction of the trend. Very strong action in NQ, ES as well. There was a really nice consolidation here that I failed to notice in NQ holding above overnight highs. This was just acceptance up here. So that's a really good push higher. And we're probably going for the gap, the RTH gap close.
Oh, a couple good questions. Thanks for the kind words, guys. You with Christian and I here, you really are getting people who have really dedicated their life to a craft and who actually do really, really care to give you the very best possible advice that they possibly can. And I think that shows from Christian and hopefully it shows from myself as well. Secondary sources of income while trading, how helpful can that be? It can be very, very helpful, guys. The old, I think it's some kind of Chinese proverb or something about the archer who shoots for practice can't miss, right? That's you on the demo, right? Pretty good, huh? The archer who shoots for a coin starts to shake a little bit, I don't know. The archer who shoots for a pot of gold, let's call it silver in this case, sees two targets. That's how hard it is, right?
Yeah.
And there's a true deep psychology to that little saying, and having financial stability if possible. I certainly didn't have that for a long time while I was trying to figure out trading. But if you can have it, It's a big deal. It just takes that already natural tendency that we've talked about on the stream here today for this next trade to need to work. I hope it works. I want it to work. It can take the pressure off of that, which, as we know, is very damning for results and for objectivity and performance. So yeah, whether that is a situation where the spouse pulls the weight financially, or whether you have that runway of savings that you've designated, okay, I can take the plunge, I can do this, or you're able to work some type of job where the hours make sense, where you can have those at least morning dedicated hours or something like that, and then have the other hours dedicated to other work. It's a big deal. It really is. It's really, really tough to
Yeah.
not be there with like pro level skills and experience, and then to say, this year, if I'm going to survive, it's going to be from the trading. Really, really tough to do. Really, really tough psychologically. Someone keeps asking, I think, I can't find it right now, but it's about like reversing. You pretty much never, okay, see me do that. That is like if I'm long and I decide, hey, I'm long, but I just want to be short and just totally flip. It's very, very, very rare. I'll say almost never. What about you, Christian? That's pretty much the same for you.
Yeah.
Yeah, yeah. I think a lot of people, in fact, I used to have a whole category of error tracking in my own trading. I called SAR, SAR trading. That was the tag that I applied and looked at how much it cost me on a month-to-month basis from making those errors. And SAR stands for stop and reverse. So they used, you know, and get caught fighting the market, get caught, especially in a sideways choppy zone, wanting a breakout one way or the other. And so I'd get long, hoping it would expand, and it's not. And then I'd get short, right? Flipping to short, hoping that it would expand. And if it's chopping, then guess what? You're buying tops and selling lows. And I was pretty good at doing that for a while. All right, let's check on the acceptance picture. We could have a decent update here. We go back to our main hypos for the session. Not quite. Okay. So what do I mean by not quite? Well, I'm taking a look at from this low up to where we are here. I'm seeing that as one rotation, right? And the question is, is enough of that rotation above 0650, the level in question? And the answer is no, right? I'm going to need to see something closer to something like this, let's say. And then as you see the second arrow, I draw it for a reason. I need to see a pullback, something that's holding a nice little down rotation that's above this level. And I'll begin stalking longs. And if we were to zoom in on this little area right here and expand that over here, well, then it's coming down. I get long. I might have a stop here. I might get stopped. I might re-enter, right? That becomes the execution game, but it's within the context of, okay, check. Acceptance picture is higher. We've broken above 0650. We've got a nice counter rotation. Now I'm going into this type of tactic over here, but only if and when that happens.
Yeah, so strong. The next zone I have for NQ is 26,180s, but the RTH gap is at 26,117. And it looks like we're just working our way into that. Hmm. Good morning push. We rallied from the fill breakdown, consolidated a bit. And that consolidation ended up being acceptance above overnight highs. New trend higher out of that. I just have to wait for another opportunity. Missed that one. What are my thoughts on UNH? No thoughts really. It's in a downtrend. What is there, to really consider? A gap down while it's in a downtrend. That's sort of expected.
I want to look at a stock. It's been a very long time.
You're gonna what? At a stock?
Yeah, I want to look at a stock. Let's do
Do
it.
it. What's your stock of the day?
UNH. Wait, where's it at? UNHF? What the heck? Oh, I'm on
UNH.
futures. Sorry. Stocks. UNH. Here we go. Get it together, Merritt. Okay. Daily. What the heck? This thing gapping all over the place? Is this
Yeah.
real? Ooh, this looks like a 1 second chart on a thin. What is this? Why is this so ugly? Cat,
No,
help
now
me
look
out.
at
Why is this so ugly?
COHR.
This is fun. Coherent Corp. I've never heard of Coherent. Okay. At least it's in a coherent, pun intended, trend.
Look at that. That looks
Um,
way better.
it
See,
does. So
that's what you look to be long, guys, not something like UNH.
I like this level here. I like this guy right here. And if you wanted to put one more, probably slap something down here, just in case there's a big sell-off. And it's always good to be prepared with levels beyond where you think price could feasibly trade today or whatever. So that's what I would look at there. We start to zoom in. A little messy around this level, obviously, but it still is important. Acceptance picture currently above that 200. Gosh, these are ugly, man. Yikes. So it looks like overnight last night drifted back into this and then boom, little rally right off of it.
Yeah.
Cool. Get me the heck back to futures. Oof.
Ooh, child.
Woo.
Party, I did look for trades. I did miss this recent push out higher. Looks like NQ's coming back down. Was not able to hold this new breakout attempt. I think we just tagged all-time highs in SPY. Yeah, we just hit new all-time highs for SPY. Well, not a lot of trading, but a lot of training
Yeah.
in
Training
today's
day.
session, guys. So
Great
hopefully
questions today, chat.
everybody
Man.
enjoyed it.
Yeah.
We don't hate longs.
Yeah. No perma bears here.
We're in an uptrend, in a choppy uptrend. it looks like NQ wanted a new high before we sort of range, and ES for SPY wanted to see higher into all-time highs.
Props that require consistency lead to this dual focus, aim versus metal, and nervousness. Not sure why there'd be a nervousness. How can we be conscious of this and look beyond it to keep moving forward? I would say if there's a consistency rule, you just trade, you just do your thing. And then I think optimizing the results for the consistency rule just means that you're going to stop on days where you're right at that, whatever that threshold is, right? If it's a, $10,000 goal with 50% consistency, obviously you're going to stop at plus 5K for the day. It's just an artificial walk away while up thing. Other than that, show up the next day and do your job, trade your process. And if you make another 5K, then stop. You know what I mean? No need for overthinking that or nervousness or things like that. But no consistency rules at Apteros Trading. Have a look.
Morning.
Hey, morning.
Hey,
Good
fellas.
morning. What's up, Chris?
What's
How
up?
you
What's
doing,
up?
How'd we do this morning, boys?
Nick, you want to lead? Tell us what you got going on.
Yeah, you're in trade?
Yeah, I'm in a short here. From 85s. It's like the third trade I've taken today. I'm probably done after this. I had a good day. I caught the initial flush on NQ off the 26K mark.
Nice.
Was kind of like worried that we were gonna V, so I was like aggressively trailing once we got the push below like the 940s. And kind of thought this might happen, and for some reason I feel like I should have been long along the way. So we'll see. If I get stopped out on this, like I said, I'm probably done for the day. I had a nice trade to start the morning. Jack, what about
Well,
you?
cool, dudes.
Yeah, so
We had a quiet day. We'll let you guys cover all y'all stuff here in a bit. I gotta hop off. But Chris, enjoyed it as always, brother.
Yes.
Look forward to seeing you again in person sometime. I can't wait.
I can't wait for you to yell in my ear again.
good morning. Yeah,
You
so
guys take
yesterday I
See
was
you,
on
Nick,
with
Jack. See y'all. Take care.
Later, boys.
I was out with Nick and Leo, and I had a limit in the NASDAQ at 39s, and it was basically we were trading into 4 o'clock, so I just canceled it because I didn't want to take it, but we retraded it in the overnight session, so I bottom ticked the overnights and the NQs, and then so far this morning, I basically have my YM position, which I haven't done anything with, got my stops in place. I took a position in the Russell, took half of it off, and then re-entered it on this last pullback. So I'm just sitting long Russell right now and YM, the weaker of the bunch, but expecting them to go up and trade back and hold through their open and get a higher high is my thesis right now. So I had some limits lower than the NQs traded this morning. Didn't get them filled. I've moved them up here as we've accepted prices higher. And same thing with CL. I had a limit a little lower, never got filled, and I'm just sitting on that one. I'll leave that out there, and if it gets filled, great. If it doesn't, I'm probably just gonna be holding this Russell and this YM into the day. And then Nick, you said you're short.
Yeah, I'm short NQ. At the 85s, 26,085. Not looking for a whole lot. I already covered one of these down here at the like the 65s, and full take profit would probably be here back to kind of the overnight high area, the bottom of this little node that we've been building out this morning, kind of this consolidation that's been sitting over here. So nothing major, just another little scalps. Nick, do you only take reversals at highs and lows of days? No, you guys don't see me kind of always trade throughout the day. You catch me when I come back to my desk sometimes, and I'm kind of just trading what's in front of me. Like the typical day for me, if I'm like not doing the show, would have been the first trade. Like we come up here, this is a longer time frame area. I had, kind of marked and was watching up here towards like the little bit above 26K. And as soon as we saw sellers kind of step on the gas a couple minutes after the open, I just went along with them. And this is in a 5 lot. So for me, that's a decent trade for about 60 plus points. And I'm happy to just call it a day there and potentially not take another trade. So just riding that initial sell momentum off the open. And yes, I did watch buyers just kind of step in down here. That's basically the area that we were shorting yesterday. And just immediately reversal. And I messaged, friends in the Discord and even said, like, I'm not being greedy here because I'm too afraid that this is going to V, and that's exactly what happened. So not that I try to top and bottom tick, I'm gonna get stopped out here, but I just kind of have to trade what's in front of me. It just that's what sometimes I seem to find myself in those situations.
I would say the best shorts always come from highs and the best longs come from lows.
Yeah, I was saying, if you guys remember, Jack had a limit order down there, but I was screaming what my target was yesterday during the short was those 840s. And so clearly that level means something to somebody. If Jack and I, without communicating whatsoever to each other, had the exact same spot eyeballed for slightly different reasons. Jack was looking to get long there. I was looking to cover a short there. So
I always love
completely different strategies coming to a similar, level in the market that makes sense.
Yeah. Coming to agreements with anytime you're looking at, with the trader that you respect and, their analysis. And I've spent enough time on stream with Nick, and if he's looking at a level and I'm looking at a level, I kind of feel better about the level that I'm looking at, because he's looking at things that differently that I'm looking at. And if we're coming to the same conclusion, that probably means there's other traders coming to similar conclusions as well. And that's what's going to create the interest in the market to turn it around. It was just unfortunately at that time that, the time of the day, sometimes, I don't want to carry positions overnight. Somebody asked me how the beach was. The beach was great, although it is a little colder here today. It's 61, so I felt like I may have brought some of the weather with me, but it's still better than where I'm from. But yeah, I think anytime you're trading and you're coming to your own conclusions and you're looking at somebody else who's has their own formula of how to get the entries and exits, and they're coming to similar conclusions, that's always a vote of confidence for me, because the market's going to stop where the most traders are interested in. And if multiple traders from different strategies are interested in the same pinpoint, it's probably a high confidence area for you to look for. But yeah, I'm a fan of, Nick was, as he was shorting the market yesterday, I thought the market was a little higher than it should have been. But, I just kind of try to be patient for a bias that I have, which was long. And it doesn't mean that shorts are the wrong trade, because they were the right trade. It's just all about timing. Like same thing here with the NASDAQ. Like I got limits below right now in the NASDAQ at 26,008. And if we get down there, I'm a buyer. And I'm sure if we get down there, Nick's probably covering. Same thing as yesterday.
Yep.
So we'll see if we get that level of trade here in the next hour. That'll be fun. But how's everybody doing? What's everyone's best market today?
I'm sure somebody would say metals are still moving, natural gas is still moving, and indices. We've got some movement today, but sometimes it feels like there's a move, and then we're just sleepwalking the rest of the day in the indices.
Yeah, nat gas, man. After that, everybody's trying to short silver, but I think I always thought that the short trade is in nat gas just from like a supply demand perspective, because realistically, when this cold front's over, just like it had a historic run higher, that is strictly a supply demand trade, as opposed to like silver and gold, which are much deeper on a fundamental level, looking for a quote unquote safe haven, or, basically a place to put your money besides the dollar. And that's totally different than, a week of cold hitting the entire nation, natural gas rising, I think it was up 140, maybe even more percent off of a 2-week low. That's coming back in. The natural gas production is a lot more aggressive here in the United States than our gold production. I don't know what gold production is, but I know it's nowhere close to nat gas. So I'm more of a fan of trying to catch the top in nat gas. Not that I'm doing that here today, but that was part of my morning trade plan. Is I thought nat gas could get a crack back down to the $5.70 level, and we've basically done that here. 14 down 12% off the close of the prior day. Beginner trade, got your first win today. Congratulations. That's a big deal. Like, make sure you close the day green. What's up, Chris Fisher? Did you get any more details on the competition, Nick? Did they come through? Or are we expecting that on Wednesday?
We're still working on it. So yeah, we're still working on it. I'm not gonna put my foot in my mouth.
Long Bitcoin, huh? I'm kind of liking that trade. I still wanted to trade a little bit lower. That was one of the trades I was looking for here today. Just haven't got my entry yet. But oh wow, I just checked it. It is moving up. Bitcoin is moving up. Yeah, for the Dow in this trade I'm in, I got long in the morning. We rotated higher. I knew I needed a little bit of a wider stop on this trade just because the structure was still heading down, but I did feel like we would base. So I didn't want to over trade that low. But this is how I manage this trade. We made this new low here at 10.10. So I figured after 25 minutes past 10.10, which is going to take us out to 10.35, I was going to move my stop below the low. And, we came 25 minutes after making that new low. That was all of the selling pressure that this thing had, and continue to rotate back up. Now, my entry isn't fantastic, but you're not always going to bottom tick the market. And I knew I needed to be a little more loosey goosey with that stop. But now that we're starting to rotate higher here, what I'm kind of expecting is an eventual push through the open, a liquidity sweep of this morning's highs right back into what I refer to as a leg start, which is at 8:45 a.m. You can see this sell pattern kind of come down here. This 3-bar move of heavy selling. That's where I'm targeting on this YM position. And my expectation is, once again, we would clear back to the open, take out any stops above the high of the day. The news that was bringing the Dow down was driven by United Healthcare and the scrutiny they're seeing, and that's a big Dow component. So I was aware that would lead to some weaker prices, but sooner or later, the rest of those stocks in that basket are going to lift this thing higher. Was kind of my theory.
And if you were not paying attention, Chad, I did just get stopped out of my long as we are poking a new high of the day here. Excuse me, my short.
Timeline of my tools will be on Ninja end of February. I'm going to go ahead and say that I am going to put my foot in the mouth because at this point it's on me. I'm in contact with my coder. There's just a couple things I just don't have on here that I want on here before I release them. He's getting that done for me. I could technically release what I have on here already, but I want a few things fixed, like this leg start, which I mentioned, which is that 3-bar move. I want to get that highlighted up here. So just working through some final details, and then I'm going to say end of February. I'll make sure that gets on there.
Feels like NQ is just a stone's throw away from a new all-time high.
Yeah, I think it's just lifting here today. When the relative strength, it's just been there today and yesterday. We're up, what? Are we up 1,200 points from like Sunday night low? It's pretty crazy.
Yeah, something ridiculous. We hit like not 1,200. We like 800, 900 points. Then we hit like the threes. I think we were in the threes.
Oh, no, yeah, you're right. My math is totally off.
But yeah, just a casual gap and go. I mean, once we were above the early open again, it's just kind of like, get outside of scalps. You should probably be long.
Yeah.
And we hit that. I think we even retested it in the pre-market yesterday. Maybe not yesterday.
Yeah. My weekly targets going into this week on, granted, because we have so much news in the NASDAQ, we're going to be up at 26,320s. And I didn't really see us getting there this fast. I figured it'd be kind of post earnings, but
yeah, I keep forgetting. We have Mag 7 earnings. We've got FOMC tomorrow. Yeah. Joy, you're going to be on for FOMC, aren't you?
I personally don't really use IB. I'm aware of it, but I don't maybe if it lines up with something else I'm looking at, but it's never been an entry tool for me.
Sorry, you asked the IB. I have it on my chart. Do I take a ton of trades off of it? Not necessarily, but it's on one of my charts.
And I'll preface it by saying just because I don't use it does not mean that it is not useful. I know a lot of traders who use it successfully. And there's definitely stats that I don't know that are around it. Yeah, so the copper structure right now definitely seems like this morning was a pretty decent liquidation of some speculative longs as far as how deep we dove in copper. And I really wanted to see a move like we've had out of lows in copper. So I would be willing to say, actually, I am interested in a pullback. So I'm gonna show you where I'll place a limit in copper, and I'll probably just keep moving it up. I got to bring it on my screen here, but I'm gonna cancel the CL order.
Order canceled.
Pull up copper. So this push out of copper, and let me to this for a 5-minute chart. I really like this bottoming formation. I mean, I wasn't limiting down there, but I do think we can trade higher from here. I'm gonna go to a 5-minute chart. And what I'm gonna look for in copper is a honest reversal on the low. Sweep down, immediately push back higher, hold the midpoint of that leg, and now we're kind of zoom in. If we can come back to the midpoint from the lows of the day to whatever the eventual high is, I'll look for a limit there. Right now, that'd be like a 584 area. So it'd be like a retest of this breakout. So
order submitted.
I'll put a limit around here. And if we can retest that breakout, I'll look to go long that zone. So that's a lot of what I do, is just look at markets that I think have bottomed and then hopefully get a pullback. So that'll be my limit there in copper. And if we get that filled, we'll move back to it. But I'm going to keep this on the screen for now because these are my active positions.
Someone was asking me, what period session ranges do your volume profiles cover? If you're talking about the ones on my execution chart here, you have the sessions volume profile, and then you have a delta profile as well as another leg volume profile. And that is basically from the swing, the current rotational swing that we are on, which is from the low of the day to the high of the day. So it's basically covering the entire session from this little swing low down here from basically 920s. That's usually about all I use. This is just a weirder day that has turned into a trend day where now it's just giving you like a singular rotational volume profile.
I don't really swing trade. So most of my trades are intraday. If I am swing trading, my process of swing trading is I need a deeper sell-off. I only like to swing trade long. There are very few circumstances, especially in the indexes, unless you are hedging a portfolio, where you should be attempting a swing trade short. Markets have a statistical drift higher. And shorts over a longer time frame, the indexes very rarely play out. And it's only in certain circumstances. And those circumstances are in most recent trading history are typically very fast. Whether it was the tariff talk post-election of April of last year, or the COVID move. Even if you look at the COVID move over a higher time frame chart, it's a blip. It's a blip. It was a very fast move down, and all of it was recovered. We always fill gaps lower. There are gaps higher that have never been filled in the indexes. As far as secondary, go ahead, Nick.
No, go ahead, Jack.
I was going to say, as far as secondary sources of income, trading is number one. But of course, I have had affiliate codes that people have used. NinjaTrader, we have agreements to help out here, but nothing significant as trading. I've been a trader. I haven't had what is it, what's like a tax form you get for working for somebody else. I don't even know what it's called. Yeah, W-2. I haven't had W-2 in 15 years. Not really.
I wish I had more side hustles and other things I was doing, cash flow generating assets that I could put my feet up and trade a little less sometimes. That would be nice. Maybe someday. Maybe the passive income from trading and everything else grows substantially and I can invest in other revenue generating things. Just make my life easier. That'd be nice.
Yeah.
Or I'll just be forced back into tech eventually. We'll see.
I have placed investments before, venture capital, I guess you'd call them, and that just never worked out for me. So I don't really like to do that too much.
Looks like they're going to keep pushing here.
I do think replacing if you have a full-time income, and a big nut, like your weekly or monthly expenses are really high, that can make trying to replace trading with that, the higher your expenses are, the harder it will be to do that. When I first started trading, I kind of explained a little bit about this yesterday. My expenses were zilch, probably under $1,000 a month. And so it was easy to technically replace my income. Now, it still wasn't a livable income for 4 years. But I think it's always a good thing if you have the opportunity to, because trading doesn't necessarily have to be a full-time gig as a time perspective. I often just trade the morning. I'm done at after this, I probably will not trade.
Yeah, I'm gonna go relax and hang out with the kid and try to get out of this house at some point, since we've been snowed in basically for a few days. It's still pretty icy, but it looks like it's going to start really melting this afternoon as we're slowly getting above freezing today. But yeah, I'm the same as Jack. It's just, if I can, I talked about it when I explained my trade earlier today. If I can do that most mornings, my day is done in 10, 15 minutes, and I'd rather go do something else with my time most of the time. So yeah, when we're done here today, I'm probably done. I'm going to take another trade. And I think that's what I always tell people too. If if you only trade, and can only trade an hour or two a day or whatever, or you're working a 9 to 5 and you trade props or something, like there's nothing wrong with just continuing to do that, especially if you're not able to even be glued to the charts all day. Like why change it?
Yeah, just got my a partial off here for the Russell, so I need to do some adjustments on this stop size. So in case
Order canceled.
Sports officiating is an excellent side gig. Pick a sport and go for it. Well, I have some choice words for the officiating crew that was at the Arizona BYU game last night on both sides. I felt like it was a very poorly officiated game across the board. And that game was a little too close to comfort.
my YM stop up here as well.
Do you guys trade prop or your own capital? The last like 6 months, I've really just been trading my own, but I'm slowly mixing props back in. I think Jack doesn't do props. I think you're just do your own money.
No, I've traded prop too.
Oh.
I mean, I will, like, if there's like a good enough deal out there. Also, I sometimes I like to put myself in like the position of what's a new trader like, like what's it like, because those rules, I think a lot of people do trade them. The thing with the prop game is very specific, like a mathematical game in a sense of your size. And all of the different rules. So when you're picking prop firms, you really got to know what your risk of ruin is, which is the amount of stops you can take before you're going to blow your account. And I think a lot of people just try to pass, the 1 day pass, or like the consistency rule really shouldn't be a big deal, because if you're putting yourself in a situation where you're trying to, pass in 1 day, you're not going to be able to apply that once you go live. I mean, you're basically full porting. So I've just been trading for so long. I don't know. I'm also, there's not many things that can keep my attention besides trading. Like, I don't know if I could ever work a desk job. Oh yeah. Also side income. I do some consulting for a financial media company. That's a startup. I do some consulting for them. But it's kind of just to get me active in other things, because like trading is really not an exciting job. It's kind of boring without, like, coming on here is exciting for me, being able to speak with you guys. And first of all, I appreciate all of you who come in, watch NinjaTrader live, come here to learn from Nick and I. So do me a favor and hit that like button, because I can tell by the chat, a lot of you probably are already subscribed to NinjaTrader Live. But if you are not, make sure you are hitting that subscribe button. We are on our path to 200K. And every time I get on here, it's up like 1,000. It was at 177 yesterday. We're at 178 today. So, and just a little bit about myself. So like my dad was like a corporate guy and worked his tail off into his retirement. And I always saw what he did as something I did not want to do, because of, all of the travel he had to do, basically working like 60 hours a week for a full career. I was like, I never want to do that. And so I saw trading as a path to avoid that. It was an ends to a means, in a sense that I knew if I could figure it out, it would provide me the things that I desired in my life, which was the ability to work from home, travel, and be solely responsible for my own success. I have been a baseball coach before. I coached my brother's team, my little brother's team, but I do have one daughter, but she's definitely not old enough to be playing baseball yet. She's 2. Yeah, thanks, Dividend Cake. I don't meet many people that trade how I trade, and honestly, unless I taught them. Yeah, how I got my level in HG is, I mean, there's a couple things going on here. I'm going to just mouse this over, but so this is a structural change, in my opinion, from the market selling off. This is, we have a fair value gap. We build, resistance. That resistance resolves lower. This seems like an exhaustion move. And then we kind of really hear when we start breaking back above at like 11 o'clock, that to me tells me that the speed of the selling seems to be over and that the structure has changed. And we're probably more in a buy regime now where support's going to get bought. Previously, resistance was getting sold. Support was, there was attempts, but those attempts were futile. So when I see this structural change of that market where we go from, and I'm bullish copper. My thesis, if I didn't have a bullish daily thesis of being long copper, I wouldn't be as interested in this trade, but I still think copper is going to continue to trade higher with the metals and just be like the lagger behind, like, the brother in the back. So when we break below this, what you have here, there's a couple things. You just have this breakout level. Okay. So that's going to be, I don't know if it's going to trade there. And frankly, I don't care if it does, but if it does, I'm interested in taking it long. So that's, part of like not forcing trades is being okay if trades don't happen. And when I look at multiple markets and present myself with multiple opportunities, I'm less concerned with what happens in the market. If I focus on one market, I am a worse trader because I am interested. I will convince myself I need to be in a trade, and I will overtrade that market.
Someone just asked me a question. I think it was a few. Would I short this? Looks like getting some bearish order flow. Looks like you want in. We might just get a little profit taking here into the euro close on the highs. Like I could see us push a little bit down. I don't know if I want to jump in and short this again though. Like it's pretty bullish. I've already tried a couple shorts today, and one worked out, one didn't. So I'm good to potentially be hands off for now. Sometimes you're just putting your hand over the stove a few too many times.
I use Windows. My Mac is used for watching Netflix. It's a very expensive device to watch Netflix on.
How do I gauge my stop? Sometimes I usually don't go any more than like 15 points. Otherwise, I feel like my entry is not great. But I usually will base it off some aspect of structure. It can be 15 at the most, but it could also be 6. It just kind of depends. And I usually adjust it too. Because sometimes I scale into positions.
My stop on HG, so I'll automatically have a bracket that just places a stop and a target for me. And then I adjust that stop and target based on my analysis. And I would probably have my stop. I mean, if I were to do a really conservative stop, it would be below the low of this candle here at 1020, because I don't think, if this thesis of this long trade is correct, that we should trade back below that price. Nick's got a got a prop for you, I think.
But someone asked me a question.
And that's where what's good prop is. What's your code, Nick? Nick's got one in his Twitter bio. How about that?
You can there's a few good ones. Not Apex. Stay away from ones that, there's nothing wrong with Apex. It's just I hate trailing live trailing drawdown. It's just it hurts you more than anything else.
Difficult.
It doesn't really teach you a whole lot except how to just force yourself to close trades as quickly as possible. So ones that don't have that, I'm a fan of Lucid. Tradeify is not bad. There's a few good ones out there.
Yeah, so I think the biggest thing is, okay, of course, you really got to read the rules, because the rules of the prop have they're always changing. The payout structure is always changing. And then even still, I find it hard to keep up with.
Because the space evolves constantly.
Yeah, there's payout caps. And then you have to think about really what is your style of trading. I think the intraday trailing drawdown is really hard. I could not, with this style of trading, could not trade that or I would have to trade extremely small size because of the deviation. Even if both these trades, they get close to their targets, and let's say they just immediately move against me, I go from basically, being up $2,000 to being $2K off of my trailing drawdown high. And that's half of a 150 account.
And, coming from somebody that's been live at just about every firm at this point, his trading career has taken a lot of payouts. I have enjoyed being a little more solo focused lately on my own account. I'm like I said, I'm trying to mix props back in just because you can't beat the leverage. And if I'm going to trade something stupid like silver, then I'd rather do it in prop than my own money. Because I don't feel as bad if I were to take an account from 5K to 0 in one trade on accident. So rather than me just losing that in my own money for no reason because I'm trading silver. So that's also part of the reason why. Just for additional leverage and trading assets that I'm a little less comfortable with day in and day out.
Yeah, I would say just no matter what, take it slow. Don't go stacking accounts until you can pass one. Till you can prove that you can get one, don't bother with 5. Don't bother with 10. You'll spend a lot of money doing that. Getting the liquidity sweep that I was looking for in the YM right now, clearing through that open and then getting back to this. So should have that target here shortly, about 20 ticks away or so.
Will adding prop trading make traders more disciplined? Depends. I think a lot of people don't take it seriously, and nothing will make you take trading more seriously than putting your own money at risk. So, depends on where you are in your journey too. If you're still learning, there's nothing wrong with getting a 50K account and just kind of getting a feel for trading micros, and your risk would be capped at, let's call it $50, maybe even a little less sometimes, versus you throwing $1,000 into a personal account and trading one micro and potentially losing that very quickly. So that would be my advice. Depending on where you are in your journey, there's nothing wrong with using it to continue to learn for about the same cost as, buying data even a month.
Yeah. And I think you want to stretch the longevity. If you're brand new to trading and you have found yourself spinning wheels, realistically what you should be doing is lowering your cost of participation so you can stretch that out. Because if your cost of participation, meaning you're spending $1,000 or maybe more, $2,000 on prop firms a month, you're raising your cost of participation in the market, which is going to shorten your willingness or your timeline that you have to learn how to trade. You'd much rather be lowering that cost to, let's say a $50 or $100 50K account, trading micros, more interested in the process of learning the whole the whole game of trading, as opposed to I need to pass this test. they pump. I saw something on Twitter the other day. It was like some guy funded got a 50K account, and he had made like $98,000 or something ridiculous, like maybe over $80,000 in less than a month. That's really impressive, but you're not going to duplicate that. I mean, he had like a 24K day first day, which I don't know how with those rules. I mean, that's beyond my skill set.
Yeah, I've been seeing a lot of big numbers flying around ever since metals started flying around. So don't be fooled by what some people have done, guys. A lot of that is a little bit of luck and some oversizing and holding trades and catching a large part of the move with some size. So, yeah, take it slow. Trade micros. Grow an account, learn.
Yeah. Also, if I were to offer, like, I mean, if I took someone that are completely brand new to trading, like, hey, I'm like, what really should I do? My best advice would be like, I would say trade multiple markets, not at the same time. Focus on higher time frame levels, higher time frame charts. When your higher time frame levels trade, your higher time frame support or resistance, move to that market. And then also I would say cap your day. Like, don't continue to trade. You're just looking for, a couple great setups of something you've pre-analyzed, and then you're just shutting it down because, especially if you have another job, you can't sit here and trade all day. Let's be honest. You can't sit here for 8 hours. I don't like sitting here for 8 hours. I like I said before, when I'm off this channel, I'm done trading here today. But I've also had a decent morning. If I was down money right now, I'd probably stick around, try to make something happen. But
Yeah, I may have just killed all volatility. We're still just sitting here.
All right, I'm out on the Dow. Just got my last bit here in the Russell. Just looking for a sweep through highs. And I think the way these markets are set up, though, tomorrow we have FOMC. I don't think it's supposed to be like a big event. I think it's kind of all known, but the earnings will move the market. It is just past the European session close now. You know what, Huda, it might make a V recovery, but that was my trade. And in a different circumstances, I would, maybe be interested in holding for a longer period of time. I think there's probably a good chance of at least a half gap fill here today. We're still down 250 points in the YM. For us to fill half of that gap would not surprise me before the day's over. But the trade I took was all I was looking for, and there's always another entry if I really want it. There was about a 200-point trade. I'm happy with it.
Props requirement to trade a certain number of days or trades can be stressful, especially if you have other obligations in life. Yeah, that's where I think some people get caught in the trap of, prop sets you up where you feel like you need to trade every single day or try to catch every single move or be involved the second the market reopens for Globex, like be back into a trade. I feel like that's what a lot of people get trapped in if you trade props, is just going through that feeling where I sat out a majority of December, except when I was on the show trying to find trades, obviously. But for the most part, there's nothing wrong with not trading every single move, every single day, every single market. You'll feel a lot better. I think I felt a lot more refreshed coming into this year by not really trading most of December, not caring if I missed something, or when silver started going parabolic and of course then just continued to go further. But yes, once again, I do apologize for killing volatility, folks.
I got my NASDAQ target is 26,114. Not that I'm in the trade, but that would be like the top of the move that I have from this morning. And we're pretty close to it. We got what, like 8 ticks away from that 26,114. I would not consider any longs above the NQ at the NQ at these levels. Bitcoin on highs of the day here.
Is it? Oh, yeah.
Appreciate that, Fractal Firm. Tell your friends. And that's a good quote there. Post that one.
Jeff, I know. I suck out all of the volatility from the market. I basically have an options dealer. Just eating, just basically getting all of the theta that I can. I mean, that's what you guys all should do. You just open spreads the second I get on camera. I didn't even notice SPY continues to make new all-time highs. Just running away. Seems like SPX has a date with 7,000. All the degenerate option buyers that are probably sitting up there.
I don't know. I feel like Nick would probably be a fun guy at a party.
I mean, I don't enjoy large gatherings. The introvert will come out of me. I'm just not that guy. Gonna be like yesterday.
How about all y'all? What got you guys into trading? I want to hear from you guys. What was the thing where like, I'm going to do this? Because that's a big leap. To just finally say, I'm actually going to sit down. I'm going to learn some software. I'm going to learn out what a futures contract is.
Jacob, that is actually true. I feel like I am a much more fun person at gatherings and events until the clock strikes about 9. And then, yeah, I'm tapping out. More of a day guy. I'm an early riser. I've never been a night owl to begin with.
Some really good answers here. Sorry, someone had a question for you. What is the mindset of a proven trader when price reaches the highest level and price is extended? Do you think shorting a day like today? No. So I mean, I've been through that pain. Like one of my friends texted me the other day about trying to top call silver or like looking for a short in silver. And I was like, why would you short the strongest market? Like, why would you not be a dip buyer? I think you really just gotta, if the easiest thing to do is, first of all, you have to look at higher, like I'm intraday trading. We're intraday trading here. We're only looking at 5-minute charts, but I am well aware of higher time frame trends. And not going to say I always don't fade them, but I try not to fade them I much rather would wait for, even if I think it's a good short, even if you were to put a gun to my head and say, hey, would you rather short or go long here? I could believe that that market is a short and I won't do it because I think waiting 3 hours for a pullback is a better trade. So but then again, I will also, at the end of the day, at some point you have to buy a high or sell a high and buy a low, right? That's how you get in the market. But like, are you selling a high in an up move, or are you selling in a high in a downtrend and then like a pullback? So like a down move and then we pop up. Like that's my ideal short. Like I don't like the short markets that are going like this. Use my hands here. I don't like short markets that are going like this. I like to, if a market's going like this and then like this, then I'll short it.
Yeah, I kind of agree. I'm terrible at trading price discovery mode markets. So a great example would be the S&P 500 right now. As we are at all-time highs, I just tend to sit on my hands. I've just taken too much abuse over the years by trying to short the NASDAQ in the middle of July as it's making new all-time high kind of stuff. Like I've felt the pain. I think everyone has to go through that too. It just kind of itches like at you to like want to short it because it's hit a new all-time high. It's something I guess you kind of learn early in your trading career too. So I just have found it's better for me to wait till the market returns to structure that I can base it. Like you guys see my screen, there's a crap ton of MGI. Like that's a lot of what I use to kind of base just overall aspects of kind of where the market's trading, levels and things. And then I have my own little secret sauce of how I incorporate that into other spots that I look at. But for me, in price discovery mode, where there is no market generated information outside of the old all-time high, it's difficult. So I just stay away and wait for the next pullback to kind of gauge a decision. Is there momentum to the downside, or is this the spot to jump in with buyers and try to buy a pullback like Jack was saying?
By the way, guys, can we get these likes over 500? We're at 490 right now. So
yeah, there's 10.
Can we get 10?
Let's go.
Can we get 10?
Five more. Let's go.
There we go. It'd be cool if it showed you like who was liking. That'd be like nice. Think like a word prize. Wow, look at that. 527. That's what I'm talking about, people. We appreciate you. All right, this has been a lot. I mean, this is a really active chat. Appreciate the activity in this chat right now. This is some great conversation going on. Chat's like almost hard to keep up with. Appreciate all you guys answering my question.
How do you get those levels on Nick's screen? If you use NinjaTrader, you can get some of them for free. This is a part of the weekly, or the weekly information is part of the Order Flow Labs freemium edition. So this will be auto plotted on your NT charts if you go to their website and sign up for the free version. There's no pressure, obviously. Just they built a lot of free tools and they've given a bunch of them away. So you can check those out. And then they have additional ones, or, there's other indicators out there that will auto plot some market generated information, just depending on what you're looking for, how you trade, your time frame, all of those things.
Yeah. Why did I start trading? So I started investing or getting involved in the stock market because I used to read the Forbes 500 when I was a kid. My dad would get Forbes to the house, and I would always read the billionaires list. And I was like, what are these people doing to make like so much money? And I realized like as a very young kid that like it was all tied to the stock market, whether it was like, Jeff Bezos or Steve Jobs or, Bill Gates, all of their capital every year and their number was tied to the stocks. So I was like, oh, I should learn about stocks if I want to make money. And then from there, one thing just led to another, just reading about buying stocks. And then once I was 18, I could open up my own account and I, learned what trading was. It's so much more. I mean, this is 2008 that I could open up my own account, but the information out there, I couldn't even imagine the value that to start from wherever you guys are, having, Nick and I on here and other great hosts. I had nothing like that. I had to learn the hard way. Yeah, why not me? Why not you? That's what I thought too. Why not me? If somebody else can do it, why? I mean, the only difference between any of us in trading is our level of knowledge. And knowledge comes from practice, studies, retention of information, creativity, ability, and willingness to learn from other people. Like, I never think what I do is the end all be all. Yeah, so I got a couple limits here that I don't know if they're going to get hit, and well, also just the time of the day. Um, Somebody asked me earlier what I do when I'm not trading. I like to cook. I like to cook. I go to the gym. I go to the grocery store because I like to do something with my hands, and then I doom scroll. I sit on my Instagram and like look at nothing, and then I read articles and about health, conspiracy theories, whatever, anything else to take care of my daughter, have fun with my friends. But that's why I like a limit order trading. You won't see me place a lot of market orders. If I'm placing market orders, I'm probably over trading.
Big conspiracy theorist guy, huh?
All of them. I've been down that. I mean, it's just for me. I don't watch a lot of TV. Like I started like when I was sick last week, I was like actually getting through series for the first time in years because I couldn't do anything else.
How do Nick and Jay handle FOMC tomorrow? Well, I can tell you what I'm going to be doing, and it's not trading it.
Conspiracy theory. Nick owns Buc-ee's privately, and he's trying to pump stock. So that's my conspiracy.
You would mean I'm trying to take it to an IPO. That is very possible. No, I wish. If there was an IPO, I would probably buy it though.
I do not. I have not read Tragedy and Hope, and my daughters too. Jim. I think you're muted. I can't hear you.
Sorry about that. Good afternoon. Good morning. I keep saying that. Good morning, gentlemen. How are you?
Good morning. Good morning.
Doing great.
Guys looking good today. How you feeling?
Fresh.
Nice.
Good, Jim.
Yeah, no, I loved a lot of that commentary, man. And be brave and courageous. This is scary when you first start. It's not easy. But you stay focused, you're gonna get it. I have confidence in everybody here.
Gotta start somewhere.
Yeah. Anyway, great job today, guys. Appreciate everybody being here. I do have a special announcement for tomorrow. Tomorrow is off the hook for NinjaTrader Live. We have a couple of extra things going on, and I just wanted to announce this before the Edge Report because I know people want to get a jump on lunch, as I do. But live coverage of the FOMC is going to start at 1:45 East Coast time. And listen to this. We have Maggie Lake, Blake Morrow, Craig Shapiro, Shy Girl, and myself for that FOMC live coverage. It's going to be awesome. And then we're going to jump right into trading the close. Jack Selman and Joey are going to be right before the press conference, but after the announcement. So they'll be doing the close. After that, at 4:00, me and Craig Shapiro are going to have a special segment, and we're going to talk about earnings. We're going to look at Meta. We're going to be there for Tesla. We'll pull some charts up, and we'll kind of analyze it. Craig will go into kind of a deeper dive of what the earnings were. So tomorrow is a special day for sure. We're going extra time. We're going overtime. We're going to get a lot of work in, and we're going to have some great talent with us as well. So I just want to throw that out. Nick will be here, midday markets. I mean, these two guys are going to be here. Let's give these guys a hand of applause, though, for landing on the line. Look at these, got trades going. Let's do it. Anyway, super appreciate you guys. Are you guys hands off this afternoon? You got a couple trades going, Joey. You're just gonna let it ride, or are you gonna be moving stuff around?
I'm going to be canceling these orders and then probably just moving my stop up in the Russell. But yeah, because I won't be here to film. Like I said, Jim, I got to go to the beach. So.
Man, I love it. Me and Nick are like, you suck.
I mean, I'll tell you what, if you can remember the numbers I'm giving you, but they're going away.
All right. Well, Nick, you got to come visit me in the summer. It's really nice time. We have beautiful beaches in
Order
Charleston.
canceled.
I'd love to someday. We should do that.
All right. All right.
Order
All right, guys.
canceled.
Appreciate you. We're going to do a quick edge report in the morning and get some lunch. So thank you guys for being here with us.
Thank you, everybody.
Thanks,
take
chat.
care.
All right, let's take a look at the U.S. dollars. It's almost a sub 96 on the dollar index right now, last time I checked. And this is not because, we anticipate a hawkish or dovish Fed. That's not the reason. We are really, 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 really breaking in the U.S. dollar, and you can really see it in the Euro FX and the Swiss franc. But here's the Euro FX chart. This is the Euro FX on the numerator, U.S. dollar on the denominator. And look at these. Look at the last, I don't know, week or so. Nothing but just buyers are coming in. We have all the moving averages just kind of rotating up. We have that 8 EMA crossed over the 50, crossed over the 21. They're sloping upward pretty aggressively, as is the MACD as well, mind you. And look at this. We took out October highs. We took out September highs today from September 2025. So this is kind of a big kind of paradigm shift in the dollar versus the other sovereign currencies. It's just really, really evident here in this particular market. If you wanted to take a peek at the Swissy, I mean, I don't have this, same, look at that. I mean, this was Christmas highs right here. I mean, we just blew through that in 3 sessions after being consolidated for a long period of time, right? This market's been sideways for a pretty long period of time. Yeah, we have some swing highs and swing lows, which isn't unusual in some of these markets. But boom, this was a paradigm shift. We broke out up. We took out these highs way back here in September. And Swissy franc, remember, this is one of these markets where I kind of look toward, are we risk on or are we risk off? When the Swiss franc rallies, I don't know why I call it Swissy, then to me it's suggesting that we're risk off. Now the equity markets are, they don't care yet. Yet is the big word. Maybe the earnings will kind of change things. Maybe we'll see what the FOMC, the flavor of the FOMC meeting is going to be tomorrow. That also might change things as well. But having said that, everything is kind of in the middle. There's bonds. Let's take a look at gold really quickly here. Where's my gold chart? Again, this is a super strong chart, but you really need to see it on an intraday chart. Let me just pop up an intraday chart. I want to pull 2 days together. And I mean, I don't see any selling. I don't see any downside resistance. This is Monday and Tuesday. We're still above 5,000 by a lot. And, look at these two value areas. They're similar, right? Yesterday's value area was extended a little higher, right, to today's high. The bottom of the value area yesterday is the same as the bottom of the value area today, right? So this is, in my humble opinion, where we're going to see support, where it's going to be hard to maintain prices below here. Yeah, overnight at the end of the day, we had some sloppy trading for sure. Probably some people adding positions and taking positions off the table, longer term traders. And right now we're pretty, this opening range is set. We're trading above it. Nice point of control, 50.83, just a little bit south of yesterday's point of control at 89. This is looking pretty strong. So, and again, gold let's see, sorry about that. It is not breaking lower. We could even kind of look at some JAX lines as well. Now, JAX 1 is kind of framing the top of the conversation right now at 5,100. So that's going to be a level we have to get through to get to previous session's high, which is a level we're going to have to get through to get up to those blind spots R2. I don't even know where 1-day max is, way up here at 5,200. So the 1-day max and 1-day min might be a little skewed today because it's the day before FOMC, right? But that calculation gives us the expected ranges, max to min, for the day based on options pricing and previous performance and all of that stuff. Great MenthorQ levels. In any event, right now, we'll see if that point of control holds. It's right in the middle of the London initial balance above the U.S. initial balance. Look at that 9 EMA. That 9 EMA is XYZ special, and I think I think Selma uses the 9 EMA as well. Any event, VWAP is in the rearview mirror for sure after the initial balance. We have a single break to the upside. I'll calculate. I'll go to edge full for this afternoon. And we'll calculate what the chances are of a double break in gold. And then we'll also look at edge full this afternoon to see do an FOMC performance report because they have a day before, a day of, and a day after report that they've been tracking performance of various markets over the last several years, and we'll get some statistics for that this afternoon as well. All right, having said all that, that is this morning's NinjaTrader Live. We appreciate everybody being here today. Thanks everybody for coming, whether you're first time here or you're a frequent flyer. Appreciate everybody being part of NinjaTrader Live. I got a couple of emails from a couple of you guys. I will respond to those. Thank you for those. Keep them rolling in. Always good to see. So having said all that, let's take a nice relaxing lunch break and get right back to it. Remember, 2 o'clock start date. 2 o'clock start time. Come on, Jim, spit it out. 2 o'clock East Coast start time this afternoon. See you then.